There we go. Okay. Hey, everybody. Hope you guys are doing okay. I know you guys just saw me drink some water here. That's fine. Loki's cruising along here. He wants to say hello, too, so he can say hello. Give him a treat. This is the last treat I have for him, well, at least on my desk. There you go. Good boy. All right. Hope you guys are doing well. Bitcoin's been on a tear over the last few minutes, as you guys can probably tell. I've actually had a little bit of a dump over the last 15, it looks like, but today is really just going to be going over the Fed minutes meeting, talking about if they're going to be doing this 25 basis point hike like everybody thinks they are now, versus a few, like last week when everybody was saying we're doing cuts. Looking at that, looking at the dollar index, looking at the SPY, NASDAQ, all that type of stuff. We did see Apple breakout yesterday. We did see the NASDAQ breakout yesterday. So the technicals are kind of screaming that we should be going up even more, even though the overall economy is not doing so hot. So for now, I'm still pretty bullish until we kind of hear more about what the Fed is going to say here, or Jerome Powell is going to be saying. But I'm optimistic that we should still try to make our way up to 30,000, unless there's some type of blockbuster big news that he drops, or he's like super hawkish or something. I still think we're on our way for Bitcoin to hit $30,000 probably by this Sunday at least. There's not really much stopping this. Like I told you guys the other day, I wasn't able to stream last night, but we're still bullish here. No matter how you look at it, we're still bullish. The only thing that can change that right now is the Fed. And on top of that, if we go over here to the Bitcoin charts, look at the daily chart, everybody. There we go. We're creeping up to some levels of resistance, but even still, you know, with the Fed data, that's enough to continue to push us up above it. Back over here to the weekly charts, you can see right there, still going pretty well. We did close above the 200 daily moving average. We're just in this current box. That's all we're dealing with right now. It's a pretty large box too, but that's what we're dealing with. We're kind of in the middle of it. Usually the middle is usually a good place for a resistance level for you guys. But that's still around 29,676, 30,000 basically. So we're still good. Now, what happens next week is probably not going to be pretty, to be frank with you guys. I think we've seen this pattern a lot where we kind of go up really big. This next candle is kind of iffy. And then the following week, we come down quite a bit. However, you know, because we have seen some breakouts as far as the NASDAQ and this, NASDAQ and some of these larger NASDAQ components like Apple, perhaps we have an opportunity here to actually get this pushed up a little bit more over the next week as well. So we'll see. All right, but let's get out of this very fast. On the 4-hour here, guess what? I was looking at this and we had a fake out on the 20. Those whales don't want us to come down as well, guys. I had to turn my mic up a little bit so I can actually hear myself talk, but I got to turn down CNBC. There we go. I got CNBC on standby here, excuse me. It's right there. And if you guys look right there, all the way down, you guys will see a countdown timer to the Fed actually start. So at this spot, guys, you're seeing Bitcoin breakout, right? Looking strong. I mean, here, it's consolidating a little bit here on the 5-minute chart. And we're seeing a solid move. This is a classic breakout here on the 4-hour. We should continue moving up a little bit more, I would say. But we had a nice little flag here. So if you guys didn't want to have a short-term buying opportunity, this could definitely be it right here. But again, this is a 4-hour chart, so you'd want to see it continue to rise up over the next 4 hours. Within 4 hours, we're having the rate hike, so careful with it. But from a technical standpoint, this is a buying opportunity for Bitcoin, okay? Now, as far as everything else is concerned, and hey GT, hey Robert, hey Elijah, buy it for Nico, Dogemaster, hope you guys are doing well. Let's see, let's fucking go. I know, dude, I'm excited to see where this goes. The Dow isn't as happy, I would say, as the NASDAQ has been over the last few days, but that's because the Dow Jones was overbought compared to the NASDAQ. Let me move my microphone here a little bit. We're kind of battling up against this old level of resistance that support we were dealing with, excuse me. And at this point, I think we can break out, but it's going to take a good Fed announcement to help them out. SPY, on the other hand, let's go over to the daily chart. Still doing okay. It's been riding back up bit by bit. Currently getting squeezed between the 20 moving average and that 50 moving average there. Again, an easy opportunity for us to pop. If you guys look at well, let's just go over to Finviz. Mostly everything today besides the NASDAQ is just kind of going a little bit more sideways here. NASDAQ has been kind of trying to make the situation of higher lows. Same with the SPY. Dow Jones is making lower lows here, so that's not as good. But then here's to the big daddy of them all. The NASDAQ right here, NASDAQ broke out. If you guys can see this, that's a really good sign, everybody. That's a really, really good sign. If you guys want to see us go up even higher, maybe up to 13,676, that's what you're looking at. I mean, we've come down a little bit here from these highs, come down a good amount. We'll have to see how much further we do come back down, if at all, based on what the Fed decides to do today. But from a technical perspective, again, this is another big buying indicator. A simple breakout, golden cross feeding into the breakout here. You guys may want to use some type of technicals, maybe as far as, Fibonacci extensions and such. But at this point in time, let's move this over here. This looks a little bit lower here. We have a little bit of resistance, and that kind of matches more up with this right here, this old high. As long as we can break through that, we're pretty much golden. So, hopefully with the Fed rate today, we could actually see that push us through. And that'd be the good boost we need to start getting back up here to $13,000 at least. And 13,000 is kind of right above that resistance level right there, right above that resistance level. But it might be the NASDAQ and Bitcoin leading the way, or maybe just Bitcoin leading the way. I'm watching CNBC right now, and every time they talk about Bitcoin, they're just like astonished and kind of mad that Bitcoin is outpacing the market right now because, they don't like cryptocurrencies all too much. They like it for ratings, but not the substance of crypto technology and what it does. Anti-bank, anti-regulation type of atmosphere, right? Even the regulation is going to be shoved down our throats whether we want it or not. But yeah, guys, we're geared up to keep on moving here. Of course, we have levels of resistance here. You guys can see that both on Bitcoin and the NASDAQ. But we flagged, we're breaking out currently, even on the daily chart for Bitcoin, right? We're making a move, and that's all that really matters at this point. So enjoy the move. We can watch this maybe on the 5-minute chart for now. And you can see us trying to make a stronger move up here. A lot is going to depend on the next 2 hours on this rate hike, though. So, take it easy. But we are having a solid breakout. That is what you guys want to see. And you can look at that. It's a beautiful move right now. All right, let's go back over here to the 1. Let's see. Mostly going sideways, I would say here. Anything else really popping? One of the things I did want to show you guys today is we talked about this probably 4 or 5 days ago now. We'd been talking about Bitcoin dominance continuing to rise and rise and rise. Well, after the last 24 hours, altcoins are not moving at the same pace as Bitcoin. Whales are accumulating Bitcoin. Retail traders are hopping in there for some quick day trades and stuff like that. But whales have been piling in here, which makes me a little bit more scared because I'm afraid they're going to rug pull us at one point if the market really gets bad in a hurry. But usually at the beginning of a bull run here, and I'm not saying this is, you'll see whales do an initial big pump to get everybody interested. And then as it rises and rises and rises, they just kind of hold off on tons of buying unless there's crucial support levels. And then once we get to an acceptable level, they start to dump fast. We might be in a mini cycle like that based off of everything I've seen right now. So for now, let's just go over here to, let's just go to the 3 months so you can see some type. Yeah, there it goes. See, we talked about dominance, and dominance continues to rise. It's up to about 46% now. That's good. That's what you guys want to see if you guys want to see a stronger bull market here. Once Bitcoin rises to a certain degree, then altcoins usually follow, having their big booms. At this point, though, alts haven't been doing a terrible job. I would say overall, alts are doing fine, but they don't seem to be moving at the same pace as Bitcoin on a day-to-day basis. It's more of when you look back on the week, Bitcoin's been doing fine, altcoins have been doing pretty good. If I go over here, right? You see in the last 7 days, Bitcoin is up 17%. Ethereum is only up 10%. Normally, you would see Ethereum up a lot more than Bitcoin, right? BNB up 7.5%, XRP up 21%. Special case here, but still up a lot. Cardano up 16, Dogecoin up 11, Matic only up 3.5%. Although this is up quite a bit, relative to everything else from the lows. But Solana up 18%, Polkadot up 6%, Shiba only up 5% for the week, 5%. Tron 3, Litecoin 4, AVAX 11. You can see which ones have a lot more passion behind them for sure, but still worth owning. Wrapped Bitcoin 16, Chainlink 15. Atom is down 1%. Bitcoin is really taking the lead here, guys. And this is, we don't see this too often. We really don't see this too often here. You can even see Stacks right here up 32%, Internet Computer up 2%, Quant 6%. And it's been pretty nice. But you guys know, I have a personal watch list, and I have a lot of crypto, a lot of money invested in some of these coins. Not a lot, but enough. There you go. email. Okay, hold on a second here, guys. They really do that to me all the time. Okay, there we go. Exit out of this one. Go over here to my email. Verify your coinmarketcap.com. Okay, sweet. Click here to verify. There we go. There we go. Are you kidding me? I just clicked on it. Click here to verify your account. Dude, coinmarketcap.com is trash. No, they just keep on resending me emails. I did it over here again. Okay, let me go over here. I know what to do. Okay, let's do this one more time. I'll just use the code here, and that should do the trick. Nope. All right, coinmarketcap.com is shit in the bed right now. But in order to fix this, oh no, I can't fix it anymore because all the market caps that we've been looking at, now the market caps are a lot higher than those 250s to 500s that we've been talking about for the past few months. It's not resending me the emails. Enter verification code. I'm getting some bad luck with this today from Gmail. Or no, this is a coinmarketcap.com issue. Oh, okay. So maybe it's just asking me to use the same one. So let's try this out. The lag will make sure you guys can't steal this. There you go. Next. Yeah, there we go. So I clicked on the link and it didn't work. Okay, there you go. All right. And hey, Teaser, hope you're doing well. Hey, Bideford, again. Hey, Sheik, what's right here? 75. Oh my gosh, we have 75 3/4 of a point rate hike. That'd be insane. No notifications here. I'm also listening into CNBC. Let's see right here. Anything else? T-notes are going down. That's good if you guys want no rate hike. All right, so you can see like over here, Phantom 7-day, 24%, but year to date up 144. You know, last week 7. So even some of these lower market cap coins, they're not doing as good as Bitcoin at this point. RLC is doing fine. UMA's doing fine. Baby Dogecoin, that's doing fine, but not over the weekly here. This is over the year to date, right? So you're seeing a lot more mixed results here, I would say, from some of the lower market cap coins that I like. But again, these are the most riskiest coins you could probably buy. You can even see this one, Castilla Network. Look at that last 30-day chart. Down, 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 down. Not every corner is going to be a winner, that's for sure. Hopefully I can see more of them where they're kind of going more sideways like this. But overall, look at this. A lot of them are down, trying to peak back up. Decentralized games. Oh yeah, that makes sense for them. But what do you call it's not all roses, I guess you would say, compared to if you check out the 30-day charts for Bitcoin. Boom, Ethereum, boom, right? BNB, boom, stable coins, Jesus. XRP's even having a late boom right there. A lot of them are looking more like Dogecoin or Matic right now, where the last 30 days they've just been kind of going down or sideways, which isn't bad because most of these coins, look at it, market cap is now $723 million. We go back to when we were buying this over the past, last year pretty much, especially down in October, like quarter 3 basically. Go back over here to the 3-month, we were all the way down here at 59, 60 cents. Now up to 83. It's still fine. But even if you go over here to back over here, what was this? Back in March, that was still around 70 cents. It was still above at 83 cents right now. So they're still doing fine. But these are some of those things that are so long term that you just don't want to sell them right now, even if the market is kind of pumping up. All right, let's see over here. There you go. But Bitcoin's trying to make a move right now. We'll see if it continues to have this breakout here. That's a pretty way of looking at it right there. There we go. All right. And hey, Joseph, hope you're doing well what do you call it? Mostly tired. I need to get on a good sleeping schedule, but all this stuff I've been doing has just been making me tired. Not specifically like the streaming stuff, but all the stuff around YouTube and getting prepared. I'm making a whole bunch of videos so when I'm in Las Vegas next week, you guys will have like a video every day of like a tutorial for an indicator or some update video on something, And then when I'm in Vegas, I will record using my phone and I'll, I'll be like, in Vegas and do like a little bit of an update of what I see in the market, or perhaps, using the Trading View app just to show you guys something pretty cool, something like that. But yeah, I'm doing well overall. Just tired. I need to get a proper night's rest. That's what I need to do. I was actually just, you guys know Tom Coin. I was just talking to him about that. What do you call it? I'm getting, I need to go outside more, enjoy nature, but it's been like so freaking cloudy despite it being spring here. And hey, Eric, waiting for the FOMC, bro, Mike. Yes. So look right there. There's a minute and 43, an hour and 43 minutes, excuse me. That's how long we have until the Fed rate hike decision comes. And then about a half an hour after that, 15 minutes to a half an hour, usually a half an hour, you are going to see us, you're going to see Jerome Powell come out and have a nice little conversation with everybody. And that's where everything really starts getting more serious, because there's a few scenarios here that you guys know that's going to be playing out today. Now, some people have been talking on the extremes as far as maybe a 50 basis point rate hike or a 75 basis point rate hike, or even a rate cut of 25 basis points or 50 basis points. To me, those seem like the extremes at this point in time, and they're probably not going to happen. I think there's really three options that he has. The first one is no rate hike. I'm going to be in a pause. All right. The second one is a 25 basis point rate hike. Okay. The third way is kind of how he addresses each one of these situations here. So there's like tons of choices technically he can make, but I'm going to sum it down a little bit. So if he does a pause, he will not just be doing a normal pause. His pause will be saying, hey, everybody, we're taking a pause to see what's going to happen here with the market and the banks to make sure everything is still going hunky-dory. And we're going to put the battle on inflation, our battle against inflation, on pause as well. All right. But he's going to say that, hey, we're very data dependent. We're very data dependent. If we see that inflation starts to rise, we will have to raise interest rates. It'll be a very hawkish pause. Okay. The other way to look at it is he'll do a 25 basis point rate hike. All right. If he does a 25 basis point rate hike, he will be very dovish, and he won't be hawkish, I don't think, in this instance. He'll be like, hey, we're doing 25 basis points, and then we'll pause down the road. We want to wait and see how all this unfolds. And that really opens up the door for the market to perceive it however it wants, right? So again, if he pauses, that's still a pause, and then the market is going to fly. Even if he is as hawkish as can be, the market will fly. All right. You guys have seen this market. You guys can see the economy. You guys can see things getting worse month by month from the data. However, the market does not care about that. It doesn't care at all about that, because everything right now is tuned to inflation and not the economy, which, we're trading it. We're making money. We're dollar cost averaging into it, and we're seeing our dollar cost average returns make us good money. However, there still is a good chance that we're going to be coming back down to the other side of all this and just having a larger drop, because we were forced to pause rates and then reignite them later on. We don't really want to do that. That leads to crises. Whenever we stop raising rates in a cycle and keep on doing it, it leads in disaster, like 9 out of 10 times over historical, in history. It's bad historically. So there's still like two ways. That's why I'm more optimistic now. There's two ways the market can really perceive this that are good. And I would say one that's bad. He has a rate hike and he's hawkish after the rate hike. I don't think he's going to do that, but that's the third best chance I would see. So again, sum it down. No rate hike, but hawkish. I don't think he's going to be no rate hike and dovish. That's not going to happen at all. No rate hike and hawkish, a rate hike and dovish, or a rate hike and hawkish. To me, I would see him being a rate hike and dovish at this point in time. And that dovishness isn't really saying everything is hunky-dory. It's that we have to pause because the banks are in kind of a crisis mode. And, he'll use that as cover. He'll use that as cover, basically. And then on top of that, we have this thing where there's a whole bunch of news breaking like every single day right now about things going bad, whether it's about the banks, what's going on over Europe, Russia, China getting together, and America's just like, we're blind at we're not really, nobody's steering the ship right now for American foreign policy. I think that's supposed to be Lincoln. I think Lincoln is the Secretary of State. I should know this. But our Secretary of State is doing a really shitty job on the world stage right now, as far as all of our attention is going to Ukraine. And so it's not really going to where it needs to go, as far as Africa, South America, even Asia, right? So our focus is too much on that, and we're getting torn apart. And somehow Russia's economy is holding up while our economy is going down. So all of that's going to come to the light as the economy starts to get more worse here. But yeah, those are the three chances. Two of them end up with Bitcoin going strong. Right now, Bitcoin has just had a breakout on the flag. Let's go to the 4-hour here. Flagged, consolidated, hit resistance for a little bit. That resistance was kind of around 28,400, 28,390. We're pushing up from it now. We got to see if we can continue to hike here. But it looks like, you know, if you want to buy, maybe this trend line's a good spot. Other than that, you probably want to be buying now with the stop loss of about, you know, 28,000 or so. Then give it a ride, see where it goes. You know, and play it out that way. But again, within these next 4 hours in this 4-hour candle, we have the rate hike. So we could drop like a rock, or we could go sky high, you know. So it's kind of a riskier time. I think that's why we're not necessarily just pumping up out of control here. But again, watch to see what happens if we really do approach this 20 back down here to 28,386 level or so. Could be interesting. All right. Because again, if you guys are just joining us, remember guys, the NASDAQ just broke out. Remember, look at that nice little move. Heading up for our next level of resistance right around here of 12,865. That's our resistance level. We might get rejected from there today, then tomorrow breakout Thursday. But let's go over here to Apple. Apple just broke out too. All right, and Apple's getting rejected right here. Is that just off your basic Fibonacci levels? Yeah. Perfect Fibonacci level hit right there. That's what you want to see. Maybe we can break out and go to 164 over the next few days. Again, that's really going to be determined by the rate hike. But we've had a clear breakout, both from a Fibonacci level and a resistance level. It's a clear breakout. That's good. Apple leads the NASDAQ right now. So as Apple goes, so does the market, because everybody's been fleeing from the banks. The Apple is seen as like a safe haven right now, which is kind of amusing to me, because if people stop spending money on iPhones, the whole market pretty much just goes down the gutter. But we'll have to see, right? Amazon looking at a level of resistance right now, way off those highs we saw, but we knew this was coming down after we saw the earnings report, right? I was really happy that the earnings report had cooled off a little bit because we were going too high too fast. AMD, this is something that's also been surging as of late, but I'm going to just move this down here. All right, we're in a pretty solid uptrend right now. I can add a Fibonacci level here as well. Right, there's your level of resistance right there. This one's been acting up pretty well. Some of these ones you can see how volatile we got though. See, over the past few weeks, I mean, we've been having some rejections off of them, a little bit of pauses here, probably better on the 15. But there's so many order blocks in here. Yeah, it's been this actually AMD isn't as good as an example. It's doing fine. A little bit of, yeah. No, this thing's just been on a tear. It's not even looking at most of these little lines down here. I mean, there's probably something else I'm missing. We're probably using this one for some of these other ones. Let me see. There's the rejection. There's the rejection. Yeah, this is probably a better example to be using instead of kind of playing all that crap out. All right. That makes sense too. But yeah, so our target right now for AMD looks to be a 105. Remember, 1 is the number I usually go for here, 104.81. I'd probably be buying calls for next week if the rate hike is no hike, or a dovish rate hike. Google's made a tear back up here after what happened with ChatGPT. Classic double bottom, came back up, retest the next day, then it took off. Maybe the 15-minute chart will show you that a little bit better. Breakout, retest, then launch, right? It's only a shame that it happened in the first 15 minutes of the day, because I don't think many people catch it, or up that early, especially on the West Coast. But, it's been doing fine. The only thing that really hasn't been doing great, I think, are just the oil companies, right? Gas continues to come down. Oil prices continue to come down. They've been rallying back up a little bit, but they have broken down below those support levels here, and that's not something you want to see. Even stuff like I own the PXD, that broke down here. We had talked about this. Broke down, showed the weakness there, continued to fall down. Next level of support is 167. That's where I'd be buying if I had a chance. But this is a dividend stock for me, so I'm just holding it. I bought this stock like way back over here. But, some of you guys like dividends. Dividend plays are really going to be good, something to buy right now. Schlumberger down. Visa. Visa's coming back up a little bit here. Visa's actually looking for a breakout too if you're looking at this. All right, so everything's getting really, really close to these levels of resistance right now, but you're seeing Apple and you're seeing the NASDAQ at the same time break out. So if Apple and the NASDAQ can really control everything else is about to break out as well. So, we're in a good spot, guys. I mean, we're in a really, really good spot. Now, you may be asking, why is this happening? Like, why are we in a good spot despite the economy being in a shitter? It's because the overall economy is not in the shitter, just the people that are in the economy are in the shitter, if that makes sense. People are spending all their money and all their savings without right now on food and stuff like that, or energy, day-to-day stuff, but they're not actually saving money like they once were, right? So savings rates are going up, but out of fear, I guess you would say. But the economy is just not in a good spot, I would say, for average people out there. But how do I say this? The people at the lower income spectrum, those making probably below $50,000 a year, they're still spending all their excess money that they shouldn't be spending, while those that can afford to keep on spending are also spending. Usually what happens is people that are poorer or, in the lower income spectrum, they stop spending money. Like, they stop buying Oreos. They stop buying name brand cereal. They stop buying, they stop buying vegan food, whatever, you get what I'm saying? And that over time has a ripple effect over the market. Those of the lower income spectrum are still buying a whole bunch. They don't want to give that stuff up. And I think it's just because everybody still has this like COVID layover where we don't want to just say, hey, I can't afford to keep doing this. And they're just continuing to go and go and go. And I have a friend that's laid off, and I won't tell you who this person is, but they are going, they're laid off. They don't have a job. They're on unemployment. They're looking for a job, and they have credit card debt that they've been putting all their excess spending on, right? And they continue to go out to lunches with friends and go out and hang out while looking for a job and putting all that money on credit. Like, to me, that is a huge no-no. But I think a lot of people are doing similar stuff where they're just putting stuff on credit. You see credit rates rising, stuff like that. It's all gonna hit the fan at some point in time. Loki wants to say hello again. Hey, Loki, come here. Yeah. Loki says hello. Yeah, you should. Good boy. Good boy. Good boy. There you go. And hey, Fitz, happy to see you. What's right here? Oops, sorry guys, I'm missing some of these messages right now. Great rainy day in Los Angeles, dude. That's good. I like the rainy days. Over here, it's 43 and cloudy. I'm all for it. It looks like it's going to get up to 59 degrees today. I can 50. Wow, that's pretty warm actually. Yeah. Then we have our rain. Yeah, I'll enjoy it. Oh, there you go. Bitcoin's having a little bit of a pop right now too. Oh no, never mind. Looked a little bit more dramatic on the 15-minute chart. But again, Bitcoin just broke out. So if you wanted to play this, you'd be buying right now. Here, we can just do this. I do this, just a little paper trading. Yeah, paper trading. That's another equity. What is this? Drop it. Trade. Market order. Oh gosh, I don't like to do this one because I like to do leverage trading, not necessarily just buying Bitcoin on spot. But we can kind of see how this would work. Profit, stop loss. No, I don't want to do that. Yeah. Whatever, it doesn't matter. We'll use it as a timekeeping mark here, just a timekeeping mark of like, hey, we broke out. We had a little bit of a retest. We'll see if we can actually bounce up and break out. Yeah. I'm ready to sell my Shiba and divide it up. I mean, a lot of people are making those decisions right now as far as what they want to buy and hold on to, and maybe making some shifts, especially since everything's been kind of pumping. They're using that as an opportunity to sell at a lesser loss, or just sell for a loss, or that doesn't matter. But they're looking to reevaluate. I've been hearing the same thing about what was the other one? About Dogecoin too. And I think this comes to the fact that people, when you look at these coins here, like the Sheebs, the Dogecoins, the ADAs, the Polka Dots, the Trons, Litecoins, Avalanches. I'm not just picking on Sheeb and Dogecoin. It's all of them. People see the market caps as being relatively high compared to everything else. I think that's fair, right? So if you look at a Sheeb over here, let's go over here to the weekly chart, auto. if SHIB goes up to all-time highs, you're looking at a return of about 724%. That is a really good return, all right? If it goes back up there, it's a really good return. But I think people always look at something like some of those lower market cap coins, like maybe an STMX or something, where if it goes back up to all-time highs, it's 1,600%. However, this is still such a lower market cap play. The STMX is at it's down 4% today, or last 24 hours, I should say. This one's only at $58 million market cap, so this has a lot more room on the upside here, and it's a newer coin, right, relative to everything else. So, you know, if this can go, you know, maybe up to 20 cents or something, that's 40,000%. That's the hope here, right? Now, is it going to make that move? Probably not, but people can dream like that, right? And this is like a legitimate company, which makes it a little bit nicer for maybe having a little bit easier time on the regulatory path in the future. But you can see STMX, you know, it's a pretty freaking solid downtrend. So eventually on the weekly chart, this thing will break out. And when it does, it should have a really, really nice move. But for now, we're still in that downtrend. No, not Luna. I don't want anybody to hop into Luna. Meanwhile, you got stuff like XRP, more stable, more reliable, higher market cap, found a bottom. It's been keeping that bottom. And we've recently had a breakout here, right? So different strategies based on different coins. And you can see, you know, XRP had that clear breakout, got rejected off of the 200 weekly moving average here, which is not surprising at all. But it's a nice breakout, right? Only thing I don't like about this breakout is it happened so fast, I wasn't able to grab some up. I don't usually trade XRP all too much. I don't even have much of it relative to like my Ethereum and stuff. This is just something I own in case it does well in the future. And I see them at events that I go to all the time down in Las Vegas, or just up here in Seattle. And, you know, they're pretty chill people, but they have staff all over the place. So they are really like large business. I don't think people realize how large they are, because all we ever hear about them is the lawsuits. They have a massive legal team, I'll tell you that. But yeah, I mean, we're at a good spot right now, everybody. Let's go back over here to Bitcoin. Back over here. There we go. 15-minute chart should do fine. There we go. Yeah, we're moving on. Oh, the one thing that we had been talking about, we had a discussion not yesterday, but the day before about GameStop here. And I told one of you guys, if you wanted to do it, buy those calls that expire like a month from now. I mean, GameStop is, I didn't think it was going to happen this fast. I did not say it was going to happen this fast. If you guys are thinking I'm some type of guru, I am not. I was thinking like push it out a little bit more. But it is interesting to kind of see GameStop like this at $24 right now. It's freaking insane after that earnings report. Now, it has been coming down a little bit more throughout the morning here. Hopefully, it can continue to get a boost up. But that has been a really nice mood for GameStop here. And I think we'd actually been looking at I'm going to set this to calls here. So looking at some of the calls we looked at the other day. Applied changes, yeah. Historical, last week to here. There you go. Last week to yesterday, excuse me. Premium. There you go. And that was 321. Yeah, so this is yesterday. There was a call bought a couple hours before close. This guy, charts, bought at 335. It's currently at $9. That guy made over like 300% on this call. Freaking awesome. Anything else here from yesterday? 321 as well. 25 strike price. Oh, this one must be juicy. Yeah, I bought it 66 cents. It's at 231 now. And at the open, it was up about, what is this? $4. Yowza, that was a 400. That was more than 400% increase right there. If he sold at open. $16 strike price. So all these calls that were kind of popping off yesterday, somebody knew something, or they were gambling that the market was going to have GameStop was having a good earnings report. That's what they were gambling on. 131, we're now to 810. Whoosh! That was the beauty one right there. Wow, that's a massive increase. So yeah, these are all massive gambles that took place over the last few days. And it looks like they did pay off here because there was not really many before the day before yesterday. Yesterday, it looks like this is when all these things happened. aggressive sweep. Pre-earnings? Yeah, there you go. Yeah, pre-earnings. And the money. How'd the in the money ones do? Oh, this is probably in the money now. 196 to 745. Still great earnings. Wow. I'm not much of a gambler when it comes to GameStop earnings because they don't really perform well historically. But for those that took the opportunity, they did a good job here. On the other side here, I should probably mention this. On the other side, less puts here, but these puts, 324, they were bought yesterday, $18 strike price. They bought at $1.42. Now it's at 10 cents. So that's like down almost all of it. So yeah, definitely there were some losers on the other side of this as well. You can see some larger premiums over here as well. Looks this bought for $4.45. It's currently at $1.22. Yeah, that sucks. That sucks. That's a shame. Anytime somebody loses money, that's no bueno. There we go. There we go. All right. All right. But yeah, it's been pretty interesting to watch GameStop really pop off there and have a nice day. And Halo Roller Scratcher, hey Joseph. Oh man, I hear that's so tired. Good to hear though, man. Definitely always tired here. When does the announcement come in? It comes in 1 hour and 22 minutes. Look right there across the stream. I can't. Here, hold on. I can do this. I am smart. There you go. Yeah, about a minute and 22 minutes. So that's when the announcement is made. And then after that, we have about a half an hour from then, or 15 minutes from then, we have him come out and do the press conference. So this is going to be a longer streaming day for sure, everybody. Right now, you're just watching Bitcoin probably try to do some type of flag again after breaking out. We'll probably see it consolidate for a little bit because we're just kind of waiting until like 11 o'clock right here for the announcement. Boom. We'll see what happens. But as far as I'm concerned, the NASDAQ is breaking out. Apple's breaking out. We're seeing a lot of breakouts across the market, and we're also seeing a bunch of things just kind of hovering around resistance levels. If the Fed announcement is good, everything breaks out. Everything goes up. All the bearishness about the economy, all the inflation stuff, it gets put on the sideline for now because he's going to be capitulating against the fight against inflation. All right. There may be people that say he's not giving up on the fight against inflation because he's still going to keep rate hike the interest rates at a high level. To me, it doesn't matter about that. To me, it symbolizes that, hey, everybody can go back to spending and putting a whole bunch of money back into the economy willy-nilly, and that will lead to more inflation, whether he likes it or not. Even if he talks hawkishly, it's going to be, that hawkish, no hike, hawkish talk, to me is still bad for the overall economy, but for the market will say, hey, we don't care. We'll take it and run with it. And hey, Georgia, 0.25% probably. I think that's what most of you guys are looking at right now. Don't forget to vote in the poll. 116 of you guys have voted so far. 18% say 50 basis points. The majority of 62% say 25 basis points. 14% say pause, and 6% say a negative cut of 25 basis points. Right? So we'll see how it looks out. But so far, you guys are saying that we are looking like we are going to be pausing here. Excuse me, with the 25 basis point rate hike. Let me get it here very fast. There we go. The best part of the show is the Fed is still behind the curve and things are blowing up. Exactly. Well, remember, guys, and hey, Ken, hope you're doing very, very well. Thanks for being part of the stream today. Joining the stream today. We talked about this last year, how they kept on saying it's transitory. I was one of those few YouTubers out there saying it wasn't transitory. And because they kept on saying it was because of, let me kind of put this into a way you guys can understand it. You guys know I grew up poor. My perception on the economy is much more cynical and much more practical, I would say, right? And so what I saw last year with all this inflation stuff going on was prices going up, right? The government saying that prices are going to go down, but they were saying this in the midterm election year on the same time when Jerome Powell needed to be reconfirmed. Calling me, like, being a cynic that I am, I would suggest that Jerome Powell lied or saw what he wanted to see in order to help Joe Biden out, giving him a wink, help. So that way he can keep his job as the Federal Reserve Chair, wink, nod. That quid pro quo that happens without any talking going on, right? It's just that I'll signal this to you, and you signal this to me. And I think that's what really led us on this course. And on top of that, when we were kind of seeing all the ships and ports in California, Washington, Texas, and on the East Coast, mostly from the West Coast though, because we have China, what you saw was, a transportation department that really wasn't doing a good job here because this was an unprecedented thing. They weren't ready for it. And then you look at who's in charge of the transportation, right? Pete Buttigieg, he's never done anything like this in his life. He's been a mayor. And a mayor is not an easy job, but it does not qualify you to become a transportation secretary, right? And so that in and of itself wasn't a good thing. And then you saw when inflation started to rise, corporations, as they normally do, will raise prices even higher so they can make a higher cut because they don't know when it's going to end. And therefore, they want to make sure they can keep their money up because they have to please their shareholders, which, funny enough, is all of us, right? And you saw that spiral kind of starting to take place. And I don't think the Fed, I think the Fed kind of realizes it, but they didn't want to say it because, again, election year, politics, to get into this type of realm, you have to be somewhat political, right? The way it ended up panning out for all of us is all we heard was transitory. It's going to be fine. It's going to be fine. And then when it wasn't fine, now they had to catch up really fast, which is why you saw such a steep rise in the actual interest rate hikes, right? The federal funds rate. So if I go over here and say Fed rates chart, in the past, when you see this type of stuff, let's just kind of mosey on over here to the 50s. Let's do a historical journey 5 years at a time. All right. 8.31, we're all the way up here and we kind of peak at 3.5, then come down with a recession at 58. I wish we kind of slid around a little bit easier. And then we let go too early, it looks like, came up, went to the 4, and then we crashed again in 1961. All right, then we were low. We did it nice and steady, right? Nice and steady. Let's not make that same mistake again. You can see how these people's mindsets works in the past, right? Nice and steady, peaked up at 5.25. Something must have happened because we went all the way back down to 4. Fine. Next recession. Oh, see, we got up to 9. I wish I could have an inflation rate relative here. Oh, it doesn't go back far enough. Okay, well, whatever. We'll just keep on looking at the other one here. There we go. Let me make this back a little bit. There we go. 70s, still the same issues here. Carter came along, I guess. What was this? Carter's administration? Let's see. 77 to 81. Okay, 77 to 81. Right here. Right there. Look how fast they had to raise rates because of inflation. Came down. They did it too early. Came back up. Reagan elected. Another recession. Then we started coming back down, right? And that's all from this mess over here. But even then, you see how we were never actually low? I mean, you can see like 3, you can see 4, close to 5. You see how we were actually never at 0? Even over here in the 90s, we bottomed off at 3. 2008, 0. 0, 0, 0. Come over here to COVID, 0, 0, 0. Then look at that. Oh, shit. Oh, you saw that monstrosity at the very end here. There you go. Monstrosity. We are going so fast. And that's why you guys are seeing stuff break as far as the banks are concerned. There you go. Looks like we're boosting back up here a little bit. I don't think we're going to just break out of nowhere. I think we might even have a double top or consolidate a little bit longer and have that little flag that we were talking about. But yeah, he's still behind the curve. That's for sure. Oh, what's it here? Hey, Daily. Hey, Mike, is it safe to buy because anything can happen? No, this is, from a day trader's perspective, I'm buying Bitcoin because there's a breakout happening, right? Traditionally, you do not want to buy right now going into a federal rate hike because it is going to be very, very volatile. Any positions that you guys have open are probably going to be on the lower leverage side of no more than 5x, and a small piece of your portfolio. Basically, the strategy for a volatile environment like this is a low investment, medium investment is fine, but low leverage with a proper stop loss. Your stop loss is going to be dependent on your support levels. Right now, maybe $28,000 is a decent support level or a stop loss level. And that medium or small amount of money, if you guess right, makes you a lot of money, right? But if it goes down, you're only going to be losing a little bit. So let's say I have a $1,000 5x bet going on right now, okay? So right here, I tried to do a 100x leverage play here for Bitcoin just to show you guys what it might look like right now. But this is paper money. This isn't real money, guys. So if I bought right here, my stop loss is at $28,000. I'm losing about 2%. So that's 5x. That's that's like 10% of my investment right there. On the other side, if Bitcoin decides to tear and we have a really good day, then we're looking more at this, where we're going to be breaking above this zone in here, and the next level of like hard resistance. I mean, really, it's not even really much of a hard level of resistance left because we're just breaking through so much shit. Maybe right here on 30,364. That's about 6. So 6 times 5, that's a nice little 30%. That's what you're looking for. That's what your give and take is right now. So, risking 2% to make whatever that was, 6%. What did I just say? 5.5%, 6%. That's what you're really doing. And you're doing that with leverage. So risking 10 to make 30, not bad. 3 to 1. There you go. But again, I expect this to probably flag unless it really wants you to just go parabolic. We have a little bit more time before the 20 comes up on the 15. I mean, I guess we can go boom right now, but I don't know if the market really wants to do that with a kind of a volatile time. But yeah, you're betting smaller amounts of money with smaller amounts of leverage. You can even go higher leverage if you want to, but for me, 5x, a decent amount of capital behind like a medium trade, see where it goes. And then at this point, this is a 100x leverage trade as far as I'm concerned. That's why it's up like $7,000. But this is, if I'm more aggressive, this is normally what I'd be doing, but I don't want to be aggressive with you guys during a crazy time like that. That'd be a horrible example, but fun, right? But again, we'll have to see. Remember, this is just buying a breakout. I bought the dip. We'll see where it goes from there. Classic me, buy a breakout, see where it goes. Nice and easy. Everything is bullish right now. All technicals are bullish. You're seeing the NASDAQ breakout daily. So you see the NASDAQ. Oh, that's not the NASDAQ. That's Bitcoin. NASDAQ broke out, heading for a Fibonacci level. We'll see what happens there. You have the Dow Jones at resistance, but also just broke above the 200 daily moving average yesterday. Seeing what happens as it approaches the 20. The SPY right here getting rejected off of the 50. We'll see if it can boom back up. 5 minute, right? You're seeing that rejection up here, coming back down. You also got stuff like Apple getting rejected right here, but also going up against a Fibonacci level. But you zoom out a little bit more, it just broke out as well yesterday, right? Still moving up bit by bit. See Google making its way back up here, broke above the 200 daily moving average yesterday. Let's see that big pop. And now it's heading back up to this next level of resistance around 107. After having this bottom neckline break test, boom. But yeah, everything is breaking out or at levels of resistance. So all we need right now is a push to just get us over the edge. And what we talked about a little bit earlier here is this. We can go back to 15 here. So there's really 3 options that I think Jerome Powell has. People can talk about 50 basis point rate hike or 75 or 25 rate cut or stuff like that. I don't think it's going to happen. If anything would have happened to be a 50 basis point rate hike over a cut, if you ask me. But I think he's going to have one of 3 options. He's going to pause and have a hawkish speech afterwards when he goes in front of the media. So pause and hawkish speech, or a 25 basis point rate hike, and he's going to be a dovish speech after that where he says, oh, we're going to wait, we're going to see what happens, we're probably done, stuff like that, and that'll still lead the market to go up even higher. Or what he'll do is do a 25 basis point rate hike and then be just as hawkish afterwards. That's what I think is most likely to come across. That should make us move down, but he may do this dovish speech at the same time because he really wants to calm the banks. I would still, for myself personally, think that we're going to have a rate hike. It's really, is it going to be hawkish or dovish? We'll have to see. And how does the market interpret that dovishness? Sometimes what I think is hawkishness the hawkish, the market thinks is very dovish. So I'm not the premier person to be talking on that subject, because to me, remember guys, I'm still one of those guys that says, hey, the economy is not freaking good. Inflation is still very strong. This is not the time to be stopping inflation. When we go over here and I show you guys all this other data, rent inflation is usually the go-to here. Does that look like it's going down? Does it? No. We do have other things going down, like I would say energy inflation has been going down. Let's go trading economics. That's been going down. It's kind of spitter spattering right now, but overall it's going down, with oil prices going down because everybody fears a recession. That should actually continue to go down, which is good. But things are not as good as we need them to be, and things are getting worse. I should better say things are getting worse. Services inflation, that's not getting better, right? And actually, let me explain this. I can do this. Oh, I can't show you guys that. I'm part of the alpha team when it comes to ChatGPT, so I get special things I can do with it. Don't tell anybody. Let's see over here. Explain services inflation to my YouTube's audience who is watching you live. Let's zoom in a little bit here. That's too zoomed in. All right. Oh, Jesus, slow. There you go. Services inflation is a type of inflation that occurs when a price of a service increases over time. Services are things like healthcare, education, transportation, and communication, which are all important parts of our daily lives, which the cost of providing these services go up. Excuse me. When the cost of providing these services goes up, the companies that provide them often have to raise their prices to make up for the increased costs. There are many factors that can contribute to services inflation. For example, if the cost of raw materials used in a service, such as medical supplies for fuel or transportation, increases, then the cost of providing that service will go up as well. Additionally, if there's a shortage of skilled workers in a particular industry, companies may have to pay higher wages to attract and retain employees, which can lead to increased prices for the services they provide. Hence, we have a strong labor market. They still have to pay them a lot more money. That money is being passed on to you. Remember that dollar hamburger at McDonald's? Those don't exist anymore, at least out here in Washington. Services inflation can be particularly challenging for individuals and families on fixed incomes or with limited financial resources. When the cost of basic services like healthcare and education goes up, it can be difficult for people to afford these necessities. That is why services inflation is an important issue to understand and monitor, both for individuals and policymakers who are responsible for managing the economy. The economy sucks right now. Is that from the policy makers? Or, yeah. Oh, okay. It's a very complex system, everybody, with a bunch of moving parts, which is true, but I mean, that's the cop-out answer. That was not the answer I'm looking for. That being said, government officials can certainly play a role, but yeah, you guys get it. That kind of decides what a lot of us pay on our day to day. Like when I go buy stuff, maybe I get stuff off. I bought some cube steak for Loki from Instacart. I'm gonna go buy some duck and stuff. Oh, I guess I can't buy a duck because I'm going to Vegas next week. Don't want to put it in my freezer for that long. But when I spend my money, most of my money that I spent over the past few weeks has all been about going out and talking with people. And that's all services, right? So I ride the bus. The prices have gone up over the past year. I go to Umisaka House, take my mom and sister. I go to downtown Tacoma to get some wood-fired pizza. I go to grab a beer. That's, everything's more expensive. That's not coming down anytime soon if you guys are looking at services inflation. That's what you're looking at right there. Those for all the good stuff you do on a day-to-day basis, that's not going down. That's why you guys haven't seen a lot of your day-to-day costs go down, I would say. The only thing you've really seen go down, I would say, is energy prices, and that's more of a global effect than what's going on here in America. Yeah, it's a little bit mixed since our economy is kind of going to the gutter all of a sudden. Inflation, let's go over here. CPI. Let's see. Export prices are a little bit expensive. Actually, I don't want to go into the data. We went through the data last time. That was a lot of data. They were going over jeans. Like the cost of jeans is in the CPI, like everything. But you guys get what I'm saying right now. And hey, Corinda, happy to see you. Bitcoin is looking good. Hey, Arlico, yes, it's very, very good. There are a lot of people spending via their credit cards, which will eventually come back to haunt them and all the hurt the credit card companies too. Yes, it will. What are you doing? What are you doing? Oh, yeah. Look, he brought his toy over because he wants me to throw it over there. Well, you dropped it over there. You got to go get it if you want me to throw it. It's right there. I was just stretching. But yeah. It'll come back, but when? Right? Everybody sells a job right now. The only way this gets bad is if everybody loses their job within like a few months period of time where there's mass layoffs. That's when like shit really hits the fan. But we don't know if we're there just yet. We really don't know. Okay. All right. He's having a good time today. Let's see. And hey, Tony, I'm doing really well, my man. And hey, Keezy, 73, beautiful. Oh, Florida, that sounds really nice right now. I'm doing pretty well. A little tired, as always, because I've been working a lot. I'm making sure to get all my work done before I go to Las Vegas next week. Been pretty good. I was planning out some stuff this morning as far as Vegas. I've been watching a little bit of CNBC. I still have CNBC running over here. Let me see if I can show you guys this very fast, if it'll let me. Oh, wait, CNBC is actually turned off while I've been talking to you guys. There we go. It's commercial right now, but I got CNBC Live over here that I'm kind of keeping track of. If it'll let me. There we go. Right, a little commercial. Yeah, I've been doing good. Long day. I'm playing with Loki a lot. He's been having so much energy as of late. Something happened with him. I don't know what it was. So like it started like 2 months ago or a month ago. He all of a sudden got a big burst of energy. At that time, he was like a year and like 5 months, 4 months, something like that. Like he normally runs a lot. We go outside for like a couple hours every day. But all of a sudden, when you turn like, a year and a quarter, a year and a half, or something like that, he just full blown energy, eating a lot more food, a lot more energetic, and I have no idea what it is. So I just keep on taking him outside as much as possible. So it's been pretty fun. Digging a lot more holes, going after squirrels even more. I don't know. I didn't switch his diet up or anything. I think maybe it's like a growth thing for a dog. I have no idea. But he's been keeping me busy a lot. It's been fun. I've been just throwing the stick out. Stick out. Only thing is I got to take off my rings when I throw the stick because my hands just get filthy because, I got a dirt backyard. Dirt and grass, but mostly dirt because I don't manage it. And what do you call it? Toss the stick, it gets dirty, all the dirt gets into my rings and stuff. But he's been having a lot of fun. I've been driving him a lot of places. Like last weekend we went to Olympic National Park, and before we go back to Bitcoin, maps, Seattle. Down here, the Capital State Forest. And we went up the main road this time, but usually we come down here and do a walk. It's nicer because there's no hunters over here. There. And I mean, we can just show you around what the roads look like over here, or the trails look like. Right. Nice little areas for you just to walk and chill out. We don't really walk, I guess, in this areas. We walk more in the lowland valleys like this. It's open. I can keep track of him. And so if he runs off chasing a squirrel or something, I can just clearly see him because I bring my binoculars. But yeah, it's beautiful, beautiful area, and he loves it a lot. Absolutely loves it. But see, he even wears Hunter's Orange. He doesn't like wearing his little vest. He wears Hunter's Orange even if it's not hunting season because I don't trust anybody out there. But yeah, what do you call? It's been a pretty fun time. Let's see. Hey, Ken, what stocks am I looking at in the short term or the near future? Apple's one, Google's one, Microsoft's the other. Microsoft and Google, you got this little AI battle going on right now that's giving them more artificial pumps. As far as Apple, it's having a technical breakout right now. Should be going higher. If you want something that could be very more volatile and kind of fun to trade, those would be the semiconductor plays, which would be AMD and NVIDIA. For me, Out of the two, AMD seems safer, and NVIDIA seems more profitable, but safer would be AMD. When you go look at these right here, and we can just pull up AMD right here. AMD's up 3% today, right? At that resistance level, currently trying to break out. Then you're looking at 105. I would say right now, depending on what the CPI data is, a 105 call right now would probably be okay. Even if we go over here, oh Jesus Christ, all right, empty. So I still got it on the puts only. I'll put take that off. We can just leave it on here. We don't really need many settings on this one. You got an AMD put that was bought today for 519, but for 421, 616, a lot of these are calls, right? A lot of these are calls. Let's go for, I guess I would say more aggressive plays. Like to do that. Out of the money and expires, 35 days and out of the money. Yeah, okay, let's go to those. Oh, not many of them. You got a 421 call right here. That's a lot of premium though. 179,000. Let's see. How's that one doing so far today? They bought it at 185. It's currently at 190. Look at that little dip earlier. Like, oh, they could have bought it at 138. Wow, they must be okay. In the long term, they're probably not mad about it, but still, really, there's nothing else here. Reset. AMD. Not much of the short term. Here's 102 calls. We're currently at 98, so 105 is what I'm thinking about personally. Those calls are 65, but those probably expire this Friday. Yeah. So if you can do the same thing for like next Friday, I think you'd be in a better spot. But for me, again, I'm still much more of a day trader. So you can see this guy bought him earlier today at 65 cents. It's currently at 92 cents right now. That's a move right there. That's perfect for a day trade right there. Don't even try to hold it longer than that. Be happy with it. That's the way I'd be trading right now. You guys know my feelings about swing trading at this point in time. I'm much more of day trading, and these options are giving you guys tons of opportunities, especially if you guys are trading the weekly expirations. But if you guys want to hold on a little bit longer, just move it out to the next week. But AMD, probably that good safe play. If you want something a little bit more wild, NVIDIA is usually that thing. Look at that tear it's been on. This isn't oh, this is a weekly trend. Okay, don't worry about that one. But magnet, right? I would normally be selling right here at the 1. That's where I go. We're breaking out above this current 1.61 right here. 1.618 at 268. After that, we had a pre-clear shot to 320. Now, do I think we're going to 320? No. But that's a lot of open room until we at least get back up here to 290. So everything's ready to blow. I mean, look at this. We already broke out this morning. It's going to be a level of support for us right now. It's kind of wild how much we've kind of ran up here. Hello. But yeah, it's been kind of wild how much we've blown up here. So we're facing some resistance, it looks like now, but this thing is still up like 2.5% for the day. But again, for me here, get that day trade. I mean, that's a very hard day trade because it all happened pre-market. I would not have made that trade. Yeah, because even then, look at that. Right there, cooled off a little bit, didn't even have a big dip, and that breakdown was like right towards the end of the day, so that's not going to be a day trading opportunity for anybody out there. A little bit of resistance forming up right now. Daily, though, let's get rid of all that crap. Let's see. 4-hour chart looks like it needs to be placed here. Yeah, the 1 right there, I mean, that's where I'd sell, but looks like this one isn't really honoring it too much as I would like. There we go. That's a little bit better. Yeah, that's a little bit better. Pre-market stuff. So technically throughout the day, we haven't actually been above it yet. So that makes sense as well. So south the 1. And you can see that breakout that we had right around here. Boom. Also matching up with this level of resistance right here. Okay. I can see that pre-market getting tapped up there. Yeah. So again, we're all at these levels of resistance. We needed an opportunity to really push us up even higher. That's really what it's going to take at this point. And hey, El Parasito, happy to see you back, my man. Oh, Rick Santelli speaking. GME needs to get the golden pocket, $23. I mean, it did have a really nice rally. I don't know if I was I talking with you, Tony, or somebody else about it. We'd been talking about, but I was more insistent that because it's so volatile, why not just buy the calls a month out and see where they go? The calls a month out are not going to be nearly as volatile as the calls today. The calls today, we looked at them earlier, they are absolutely insane. Oh, Rick Santelli is speaking. We can listen to him for a couple seconds. Let's go over here.
Difference between those two terms with regard to mortgages during the credit crisis. But in the end, if the market can be comfortable with a quarter, the Fed will deliver. But after that, Tyler, I think things start to get a bit dicey. We've seen interest rates reluctant to rise, especially in the longer maturities. That's a global phenomenon. The slowdown most likely is a global phenomenon. And with respect to banking, well, where's the deposits once they end up in large banks? Is this going to be a real shortage for activity in some of the community banks, some of those smaller businesses? There's nothing but questions ahead. We closed the economy. We paid for the economy when it was closed. That down payment of trillions that Kelly pointed out purchased a whole lot of inflation. We guarantee everything under the sun, and debt is off the charts. What the markets are telling me is that somebody needs to be the responsible parent in the room, because some of these Fed fund contracts are doing a real about face as we get towards the end of the year.
Seth Carpenter, what's your expectation for today?
Okay, I don't care about Seth Carpenter. Seems like probably a nice guy, but I don't know who the heck Seth Carpenter is. There you go. But yeah, again, that kind of summed up a lot of what's going on right now. We do have a lot of inflationary pressure kind of pushing us up, because you can see over here, it won't let they've blocked out a month. They've blocked out a month. Okay, that's fine. Look at the 3-month chart here. Remember how it's been going down? They've been letting it go down and down and down and down since they did all this crazy hiking over here during COVID, right? This was COVID. This was after COVID. This is 2021, 2022. Holy shit, they've been going forever. Look at that. 3 months. Look at that. All that work gone. All that work against inflation gone like that. It is absolutely insane. And this is only from March 15th. I remember, like, good God, guys, like, this is horrible. Like, from an inflation standpoint, this is actually horrible data. But I mean, like what could you say? Like, this is let's go to 6-month chart here. So all the work we've done since mid-November is gone within like a week. All that work from November to now is now gone. So that's what, November, December, January, February, November, December, January. 4 months of inflation fighting gone in a week, right? And that's only the beginning. We don't know if this thing is going to continue to go up and up and up. And this is why inflation is going to get worse. Like, remember, we spend so much and we just had a tick. Everything was looking so good. And then banks, boop. We need to help out the banks, boop, right? Oh gosh, yeah, we're in a weird spot. We're definitely in a weird spot now. All right, watch out for this double top right here. We're still consolidating. Again, watch more for this pattern here. I showed it to you guys earlier, but I don't want to keep it up here because I don't like the way the line looks. But get ready for something more like that when we pop off or break out. It'd be more around here, I would say, around 11 o'clock. We need that to be the case, okay? But what do you call? Oh my gosh. The Fed, yeah, the Fed is the Fed's funny. Some might say it's a joke. And have a good day at work, Bideford. Hope you're doing very, very well out there. Sell some nice little properties. What do you call? I bet the market's actually still pretty strong for you right now, actually too. And hey, Woke Egypt. I'm looking at a juicy day trade off of this rate hike. I plan to, but it's no hike 25 and short. It's 50. I don't know about 25. What would you recommend? The 25 is the case. So if it's 25, you'll probably see a 25 is tricky because it gives you two options where everything else gives you one option. So if it's a 20, if it's no rate hike, then it's going to be a no rate hike. It's a pause with a hawkish speech when he goes in front of the press. However, when it's a 25 basis point rate hike, it's a little more risky here, a little more dicey, as Santelli would say. And that's because he can do a 25 basis point rate hike and have a dovish talk, or he can do a very hawkish talk. I would say with a 25 basis point rate hike, I would still assume the market would go up, but I would say it would go up because of the talk itself, okay? The talk itself later on. So with 25 basis point rate hike, I would still see the market kind of going up, and I think that's the way to play it. If you want to play it a little bit safer, you can do a hedge. That hedge would be something of like a 25% of your initial investment. But I mean, if you want to, since it's already a risky play to begin with, it's better just to have that stop loss and just do a straight naked call. Now, naked call is a little bit more risky than the covered calls, of course, but I would just play it like that. To have a stop loss. If it hits, it hits. Don't worry about it. But give yourself some extra leeway. Be liberal with that stop loss, because you know how a lot of times before the announcement there's a big old wick down to capture all those stop losses, then it pumps up, or there's a big spike before it dumps. You need to be prepared for that to hopefully not kill your your position right there. I would still be bullish after everything I've seen today. Still bullish. The only thing you gotta understand is from a technical perspective, a lot of things are at levels of resistance, except for maybe the NASDAQ, Apple, which have been breaking out. But you're seeing a lot of other assets at resistance levels, and they're all kind of waiting to see what happens next. So everything's in what you might call a holding pattern. But a pause with a hawkish tone is good. A 25 basis point rate hike with a hawkish tone is not good, but still okay. And a 25 basis point rate hike with a dovish tone is obviously good, right? So 2 out of 3 of those things are really going to make the market go boom high. The third one can still make the market go high. And there's no reason for me saying that, except for the market is very irrational right now, right? Like they're going to have to give out some type of really like hawkish statement at the time of the rate hike in order to get people to really sell at this point, right? That's what's going to have to happen at this point. "25% equals slow and steady rise. 0 and 50 will pop and install fear that something is really, really wrong." 50 will instill a little bit of fear that maybe inflation is a little bit more sticky than we think. A pause is much more dangerous, in my opinion, for the longer term markets, because that means that something really, really bad is happening. Now, as far as I'm concerned, it's just like, how does the market perceive it? The market so far has been treating all bad news as good news. So again, how do you want to look at it? That's what makes this so much more difficult than in previous bear markets, because of how everything else has been kind of like priced in by the experts, right? And hey, Echo, I need to find a place to eat. So do I. I haven't had breakfast yet, and the more I drink water, the more my stomach is telling me, hey, you need to have something in your stomach with this water. And right now you're seeing Bitcoin take a little bit of a dive right now too. See me a short-term dive, nothing really crazy, but you're seeing some selling pressure come off right over here. Oh, I see. On the minute chart, you guys are seeing this little shoulder, head, and shoulders. Maybe it might be better to do something like this. There you go. Maybe that's better for your eyes, but yeah. Head and shoulders playing out on the 1 minute chart. That would have been a beautiful scalp right there, though. But yeah, so you're watching that play out, and you're also seeing this shorter term breakdown right here. You basically just don't want to see Bitcoin break down below this support level over here of 28,441. Until then, you're hoping for some type of consolidation. But we got our fake yellow play on already. I'm not going to change it because the price is going down. Let's see. Go back over there. Yeah. It's always nice to see those little mini patterns play on the minute chart. And you know why there's a nice pattern playing on the minute chart? Because everybody and their mom is day trading right now. So everybody sees the same exact pattern. They're like, launch it. That's what's happening right now. Which is why I like trading stuff that has a lot of liquidity, a lot of traders trading it. Everybody trades the same patterns. It's just, hoping that whales don't come in and kill our fun, so to speak. But on the 15-minute chart, maybe we might find some support, or maybe a little bit more of a dip as we approach the 20 moving average. Excuse me. And hey, bearish continuation pattern, did it work? Oh, I'm at work. Did I miss something, guys? Nope, you didn't miss anything, my man. It is currently 10:15 my time. You have about 43, 44 minutes until the rate hike is announced, or the rate increase, potential rate increase is announced. And we'll see if the market really takes that well, or if we have a really bad drop off because of it, right? That's what it's going to come down to. Let's see. Oh, and hey, legends have it. I'm pretty sure the inflation reports. Everyone. Hey! Don't touch my water, boy. My dog's over here with my water. My water is going to spill on my keyboard. This is expensive. Mechanical keyboard costs a freaking fortune. Don't mess with that. I'm pretty sure inflation reports very much dressed up to look not as bad. I don't think you underestimate liberals' goal and win to and maintain this idea that everything is great when the party is in power. I mean, I don't know if it's necessarily Democrats doing it as much as bureaucrats that want to keep their positions in power. That's how I kind of look at it. We talked about this a little bit more about a little bit a while ago. Maybe this is a comment from a while ago. But to me, it's more of they're open about it. They just don't expect anybody to actually look into it, right? The average mom and pa shop or the average family out there doesn't do what we do, guys. They're not watching me right now. They're not watching my friend Tom Crown. They're not watching Benjamin Cohen. They're not watching all these other people like BitBoy, whatever. They're not watching Meet Kevin. They're not really watching to see what goes on during this inflation crisis. They're just like, is it good? Is it bad? Looking at that core CPI, they're learning about this number from CBS News, NBC News, CNN, Fox News, learning about that, right? And so they don't understand that the numbers have already been changed. The Federal Reserve has been very open about this change, but because nobody really reports on it, nobody will know about it. So it's like only you will see the reports only if you actually are in this realm that we are in. So like if I go, CPI data has changed. See. All right. Something's different about the consumer price index this month. See, no. Yeah, there you go. Recent and upcoming methodology changes in 2022, posted September 22nd, 2022. Beginning with January data 2023, BLS plans to adjust the weighted method for owner's equivalent rent, or OER, owner's equivalent to rent, and the CPI. Well, what's been happening with rent inflation? We just went over this. There you go. Rent inflation's still going up. We know this, right? It's not hard, guys, right? It's not hard. But most people just don't understand it. And am I going to go around and start yelling at everybody saying, oh my gosh, everybody, the government's out to get us? No, because YouTube will ban my freaking channel and a source of my income will go away. I don't want that to happen. But I can give you guys a frank discussion about it, and YouTube doesn't care about giving you this discussion. But am I going to go full Alex Jones and be like, rah, right? No. So, it's there. I mean, I'm kind of numb to it at this point, I think, because doing this for a few years now, like 5 years now, full-time trading. I'm like 4.5 really, but doing this for so long, you just understand the way the system is built up and the wink, nods that happen, but they don't have to really talk in order for that to happen. Remember, we just talked about this with Jerome Powell, transitory inflation. He did transitory inflation because he wanted to keep his job and he wanted to be reelected or renominated in front of the Senate to continue being the Federal Reserve Chair, because it's a very high privileged job. There's a lot of credibility that comes with it. It's a lot of social prestige, right? Remember, a lot of people think about prestige over in DC. It's not necessarily just about the money. It's prestige, what you're known for, the old school elites, old school type thing, right? They have their cottages up in Maine and Vermont and stuff like that. They're very nice little houses over there. It's a different type of mentality, but they're not hiding it. So like if people find out later on, they're all mad. if they can go back here and say, we told you guys here, the media just didn't give you a proper reflection of what's going on, right? The CPI program plans to replace the data collected by BLS for new vehicles indexed with transaction data from JD Power. They're changing the place where they get their data, right? This index will continue to include prices for cars and trucks, but will no longer include motorcycle prices. Just have all the data in there, right? I don't even know if motorcycle prices have been like up or down. I don't even know if it would actually hurt them or not. So like, motorcycle inflation? I don't know. Motorcycle inflation chart? I don't know if we could find the data on this, honestly. Oh, they're talking about tire inflation. Oh my God, I don't know. There you go. They don't have any data, so this isn't really a lot of data here, honestly, so I can't really give you anything there, but no, I can't even tell you. It looks like it's been pretty steady, though. I mean, it went up a little bit last year, but not a lot. You know? I don't want to look for the data that much. Oh, Bitcoin took that dip, damn it. But what do you call keep an eye on Bitcoin as well. But I mean, guys, they're very transparent with it. It's like a short little page right here that goes over everything they're changing. Then you got to click on each little link. It's there. But publication of the new combined cars and trucks series will be discontinued at the same time. The full list of discontinued series is available online. Seasonally adjusted indexes and calculated seasonal adjustment factors will continue to use BLS collected data and will not take the new data source or methodology into account until the year 2023. Revised indexes and seasonal factors are available at the seasonal adjustment in the CPI. Right? I mean, they're transparent. They just know that nobody's really going to cover it. I mean, CNBC talks about it. You'll see other types of people talk about it all the time, but people don't understand what it means. They just think the formula's changed, but it can't be that big of a formula change if it's the Fed. Then all of a sudden you see like, it's really not. It's a substantial change. They're not hiding it. It's just nobody cares. Nobody wants to care. It's sad, but I mean that's the truth, guys. I mean, like I'm pretty frank with you guys. The system is not really. The system isn't. It's a bad system. I don't know what to tell you. Again, I grew up dirt poor. I grew up in Salishan, Tacoma. Remember old Salishan, Tacoma. I lived in houses that looked like this. Well, I guess not that big house. That's a kind of a weird thing right there. But this is new Salishan. It looks all nice and pretty though. Yeah, like this. I had a house that looked like that with rats screwing on the floor until you kind of boarded up all the holes in the wall and you killed all the rats from buying stuff at Home Depot. I broke a finger once by a mouse trap or rat trap, right? I don't think many kids should have to live that experience, but they do. Not anymore. Look at all this nice shit. Look at this. Look at this. Look at this. Look at that. Look at those nice houses. Look at all that. Not nice cars, but that's okay. What do you call? People can safely rollerblade in the neighborhood. Although they took all the blackberry bushes out of this neighborhood, so I used to get free blackberries, and I used to make smoothies with my mom, blackberry pancakes with my mom, and make some blackberry pie with my mom. Delicious. Except for when you got stung by the freaking bees. But let's just come a long way. But back in the 90s, nope, not a good time. But so I'm much more cynical of the government overall. I once had my mayor, not my governor of the state, come out to my community saying how good it was and how everything was getting much better. And then like not 3 blocks away, there was a shooting. I kid you not. And then she got whisked away. And of course we were like, oh, it's just a shooting. It's normal, right? Or the time when it was Christmas and we heard a whole bunch of sirens, and instinctually my mom put me in the bathtub because that's the safest place when bullets are flying. It's hard to get through the bathtub stuff, right? But what it ended up being was it was Santa Claus on the back of a fire truck. So slowly everybody emerged from the neighborhood, but nobody knew what the heck it was at first. We thought it was like somebody was about to get shot. It was about to be a shootout or a standoff. So just like stay inside the house, wait it out. That was what you did back then. I'm pretty sure there's still lots of communities like that in America today. But thankfully, through investing, through a good education, by working my butt off in school, I no longer have to deal with that type of shit. But you know, it definitely warped my mind as how I view the establishment elite in this country and like the status quo that they kind of like to deal with. I'm not much of a status quo guy, but yeah, it can be pretty darn bad out there for certain groups of people. And hey, Ron, pause button, please. What do you call? Oh, yeah. What do you call it? I mean, they might be trying to hit the pause button, but I was listening to Josh Brown yesterday on CNBC, and he says he thinks they're going to do a pause, and they should do a pause. I think the people that are in the pause camp are really thinking about the banks, and like they're really afraid of how bad the banks might get. But you know, at least from my perspective, and I'm no expert on banks, the banks have taken out hundreds of billions of dollars of loans already. They have a backstop right now. The Fed is saying that if any bank goes down, all the deposits are going to be insured, which is insane in the first place, leading a bad precedent. But that's what they're doing. So that's what we have to deal with at this point, right? Buying $100 worth of Doge today, y'all. Just thought I'd give the warning before the inevitable dip. And hey, Mr. Judge Warman, it happens to the best of us, right? Haven Protocol, this is an amazing project with big things coming. Research is fast. What do you call it? There you go. Let's see. It has to be 25 to stay on course to fight inflation. That's what I think, but logical thoughts don't always work when it comes to economics. These people don't always like it. Right now, they're doing a breakdown on CNBC of the things here.
Below the 4,000 level, down about 7 points, and the NASDAQ down just about flat on the session right now. But if you take a look at where the sector dynamic is, it's all over the board, all over the place. The relative leaders so far in trading today have been in certain places in the economy like technology and consumer staples. Very different ends of the risk spectrum there, right? Meanwhile, some of the biggest laggards are a cyclical like energy, down 0.5%, and real estate, down about 1.5% as well. So a very interesting mix developing as traders jockey for position. Now, the banks are a huge focus still. We saw outsized gains yesterday in many of the financial institutions that have gotten beaten up the most in the wake of the failure of Silicon Valley Bank and the takeover of Credit Suisse by UBS. First Republic Bank is down 4% right now. Charles Schwab, the broker-dealer bank holding company, down 4% as well. PNC Financial and U.S. Bancorp. These are interesting here because both these stocks got called signature or top picks by Mike Mayo at Wells Fargo this morning. And then the regional bank ETF's down about 2% right now. And if you're looking for that stock of the day, it has to be outside the S&P 500, the OG, the original meme stock, if you will, GameStop shares. They're up 41% right now, and that's off the best levels of the day.
The OG.
A profit they turned for the first time in 2 years. But you take a look at these shares, volatile for sure, but watch those GameStop shares, guys, up 41% right now. Tile, send things back over to you.
All right, thanks very much, Dom Chu. Still ahead, we're going to head to Capitol Hill, and a top member of the House Financial Services Committee who is calling for the government.
Whoosh. That was pretty funny. We even get some GameStop shout outs every now and again. That's always a nice thing to see. There we go. Hey, Tony, save all the opinions for Discord, Michael. You can go full Alex Jones there. For real, I need to hop on Discord more. It's more of like, I don't have the time for as much Discord as I want to. I need to make some other channel people in there that can kind of help the Discord grow. Because I want to be in there as much as I can, but it's just like I don't have the time for Discord as much as I want to, and I want to be in the Discord channel more. But I need to get on the Discord channel a lot more because well, frankly, guys, if you guys know, it's dead. It's dead. It hasn't been very viable since I would say since the Dogecoin days of 2021. So definitely a while ago, right? I don't know how to really grow a Discord channel, honestly, and it's become frustrating to me to try to learn how to do it. So I will try to be there a little bit more often, but like, I'm going to have to try to talk to a service, do a bot service or something where I can get you guys free data from them as long as they sponsor the channel or something. And so like if there's like a bot alert or something like that, like, hey, this is going on here, blah, blah, you know. Oh, what I can maybe do is do a change of character bot alert for you guys on the daily charts. I wonder if that would be kind of interesting. I don't know how to do that. I honestly no idea how to do that, but I would love to talk to TradingView to see if they have something like that for the channel. I'll reach out to them later on. One of the algorithm channels, I'll reach out to them and see what they do. Because I could probably do it with Chart Prime. I'll see if Chart Prime has a similar like that or something like that. I'll see what it works out to, but again, we'll have to wait and see, everybody. Yeah. Speaking of Chart Prime, they are a sponsor of the channel, so if you guys would like to try some premium overlays for your charts, they have been pretty useful for me. So far, I would say they have actually worked pretty well on Bitcoin today, now that I'm looking at it. You can see them working out. We're getting rejected off of this resistance level over here pretty handily. I'm just still hoping, though, that we can break out if we have good CPI data here. And you can see how some of these other ones have been working out for those resistance zones, support zones. I guess, no, this was a banking crisis. That's a little bit different. And some of those was resistance zones over there. So it's been working out pretty well. So if you guys want to try them out, I do have a link down below, and I got you guys a 30% off discount code. Now, I'm hoping we don't break down below $28,000, which is all the way down here. This is my support level or my stop loss. But again, we'll have to see how that pans out pretty soon. We got about 27 minutes, everybody. It has been a really good day so far for the markets overall, I would say. They're still holding strong. Everybody's kind of nervously waiting, but we haven't seen some type of large capitulation over the whole market yet. Everything still seems to be fine. Bitcoin itself is up 1% and 1.15% since the new candle opened up. And hey, Shannon, Mike, you've mentioned that you're 28 and have not been through a market like this, and I think self-taught. Do you recommend any old schoolers in the finance economics you learned? Not really. For me, it really came down to this. I didn't watch many YouTube videos to succeed necessarily. This is going to sound so old of me, but because I'm only 28, I read books. I read a lot of finance books. I used to travel a lot when I was younger. I used to save up just to travel, see my friends in Philadelphia, the friend I'm visiting in Vegas next week. I used to go down to Vegas. I used to go to Texas, California, all these trips. And every time I would travel there, I'd buy a book at a bookstore for the ride back home. And a lot of them were retirement books, finance books, becoming wealthy. Remember, I grew up dirt poor. A lot of my friends, because I went to private school, I saw what wealth can get you. And so they told me to read books, it can just be investing for dummies, for heaven's sakes. Reading those books and getting, understanding what they're talking about, it makes a huge difference. In my bedroom right now, even though it's been chewed up by my dog, Loki, I have a book and it's Charting for Dummies. Like how to set up your charts properly for dummies. And it goes over a whole bunch of technicals, what you guys might want to be setting up, the difference between log off over here, like at the percentages, right? All types of stuff. Did I read the whole book? No, but I read what I thought I needed to learn. And then from there, it really comes down to being data dependent, as the Fed would say. Bitcoin's still getting pushed down here a little bit more, guys. But like when, keeping, I'll sum up how to go full-time trading in like 30 seconds or a couple minutes here, step by step. And you're not gonna become a full-time trader just by listening to it, but I'll give you a good layout. And I think you know this now as well. And when I release my course later on, you'll figure it out. You'll learn about it more in depth, I should say. So first, you just have to start saving money and forget that you're saving money. Just save money, put it into maybe a 6-month bond or something like that, or T-bill or whatever that you can earn interest on, 5% for 6 months. It's really good right now. So you can earn money while you're learning this educational phase. If you want to trade and spend money, definitely go for it. But usually people that are new to trading, they usually lose money, right? It's just the cost of doing business to learn how to trade. I lost like $15,000 learning how to trade, right? No person that I've ever met has that's a full-time trader has just instantly became good at trading. They didn't lose money. It's impossible. So you start learning the basics after you start saving money, what are candlestick patterns, what are regular patterns, what is a stock, what is a cryptocurrency, what is a forex pair, right? What is an option, whatever. Most of the time, you guys are just going to start off with cryptocurrency or stock. Don't go for the other things because it's a little bit more difficult at first. Like Forex, you're not even talking about numbers, you're talking about pips, right? Hey boy, sorry, my dog's over here on the lap. And so after that, you start learning the basics. You choose about 5 to 10 stocks that you want to trade, or 5 to 10 things. Usually that's like 8 stocks and two cryptocurrencies. Those cryptocurrencies, to be frank, really should be Bitcoin and Ethereum. If you want to add a third of cryptocurrency, that could be something more volatile like a Matic or an Ethereum Classic. Then what you do after you find those 3 cryptocurrencies and stocks, these stocks are safe stocks like an Apple, a Google, a Microsoft, an AMD, more volatile ones, sure, but they definitely go up over the long term. And then you could also be putting other stuff in there, like maybe an oil company like a ZOM or a Chevron. Perhaps if you're looking for something a little more stable, but still can trade very well, you can do a CVS or maybe a Home Depot. All right. And you get those stocks all together and those cryptocurrencies all together. And you make 2 separate trading journals, one for your cryptocurrency trades and one for your stock market trades. If you want to get even more detailed than that, you can do 4, one for cryptocurrency day trades and one for cryptocurrency swing trades, then one for stock day trades and stock swing trades. All right. Then from there, you start to practice trading and you start to figure out what works out for you and what works out for the actual stock you're looking at. And then as you find these trades, and you do these swing trades or day trades, you'll start to kind of learn which system works better for you. Are you better at trading cryptocurrencies or are you better at trading stocks? Right now, from some of the people that you guys know, I have like, I charge like, I don't know, it was like, what was it? Like $200 or something like that for an hour of teaching. I don't really promote it all too much because people usually just ask for it in my email. I don't want to get overwhelmed, so that's why. But what we go over, and I found out for a lot of new investors, especially when it comes to day trading, which surprised me a little bit, I would say, but I kind of looked into it and I kind of understand why now. A lot of you guys are actually more profitable with cryptocurrencies than you guys are with the stock market, because which I always forget, and I suck at I'm bad at remembering this. A lot of you guys have jobs. I don't have a job. This is my job, right? So what I tend to see happening is, when you guys trade stocks, you guys aren't 100% in it. So you guys aren't 100% like focused on it because you guys may be looking to trade while you guys are at work, or you only have a few minutes in the morning, like a half an hour in the morning before you have to go off to work. So it becomes much more difficult, right? And you guys, so by the time you guys want to trade stocks, you can't just get off of work and you go trade stocks. You just can't do it. And so to fix that for the stocks, what you normally can do is you do all the planning in the weekend. We talked about this, I think it was like months ago, though I haven't really brought this up since. You do all of your technical analysis on the weekends, and then you wait to see what happens throughout the week. And if you get one of those alerts that you set up, you simply make the trade, and you kind of make sure the news is all decent and there's nothing really crazy going on like we have right now. And then you place the trade and you let the trade work its way out for you, and you make some money off of it. Or you don't. You have the stop loss and the target price already set. So it's either going to hit one or the other. Okay. And you might have a time slot on there too to kind of make sure it closes out on a certain time, but usually you don't have to do that. And that can kind of help guide you because you kind of automate it a little bit. And so you're a little bit less stress free. So at the end of the day, you know how much money you could lose and how much money you can make. And so if you know what you could lose, you're not going to be as disappointed or mad at yourself, right? Especially if you can keep your control over how much you could lose. You're not going to be like, oh man, I lost $500. You're going to be like, oh, I lost $500. I knew that was a potential thing that could have happened here. All right. But when it comes to cryptocurrency, you guys can like say, hey, I can only trade cryptocurrencies from 7 p.m. because I get off of work, I have to drive home, yada, yada, 7 p.m. to 10 p.m. You can get home, get some dinner, get a cup of coffee, sit down on your desk, look at the charts, do some research that you on top of the research you did over the weekend, right? And then you can, sorry, my dog's moving around. And then from there, you can start doing your trading there, and you have much more of an attention span to it. You can pay attention. You don't have to worry about work, nothing like that, and just do it. And if you have to do work after hours like that, you can always find another time within there, which makes trading cryptocurrencies a lot easier. And at the same time, with all of this stuff going on, during the day-to-day market, you guys can always see what's going on and try to find the most volatile times to trade and try to like adjust your schedule to it. But reality, like the reality of cryptocurrencies, you can trade whenever you want to, which makes it really beautiful. And if you guys don't have $25,000 in your account, you don't have to worry about the dumb government bureaucracy rules of pattern day trading that have to go on. You guys can just trade and buy as much as you guys want to, and you'll be perfectly happy with it. That's the kind of way to do it. But it really comes down to the data. Remember, I have this. Show this to you very fast. Drive. All right, I have this trading journal right here. Now, this is a mock one I did with some of you guys. All right, trading journal options, high risk plays, right? And so this is like me keeping track of everything, right? Now, I didn't use leverage at the point because I was building this out, but I'm not buying 500 shares of Apple. This is like, 5x leverage on Apple or 10x leverage or 50x leverage. You get what I'm saying? But then, I gave this where Dante. Oh, there you go. So Shannon, you're a member. I will put up a video in the member section for you because this is free with all the members, for all the members out there. What do you call it? So you keep track of everything using this free one. And there's like codes and stuff into this somehow. I paid for it. I paid a lot of money for somebody to do this for me. But basically it calculates your profits, your capital gains tax, your net profit. And then over here on the right-hand side, you can actually set up the pattern. I think this has the majority of patterns. I don't know if I got every single one of them, but it does have the majority of them. So symmetrical triangle, ascending triangle, falling wedge, descending triangle. All right. And then so what happens is you go over here and you can see how much total you've made for the month, right? Or, for the week, month, whatever you want to do. And you can see right here, the total right here, if I can go over here, total profit loss, all right? That's $6,767. Total and taxes, right? $3,976. And then you got the net profit loss over here, $18,372. Then what you can do is you can go over here to the pivot table. I don't know if you guys can see this. Oh, it's behind my head. And from over here, you can see what has actually been most profitable for you. So you can see that, let's see. I need to get, there you go. Okay. So cup and handle doesn't work out too well. Ascending triangles do work out okay. Inverse head and shoulders don't work out too well for me. Head and shoulders over here work out a little bit better. Inverse head and shoulders total, not good. Oh, we just talked about that. Pennant total, not too good. Rectangle total, fine. Rising wedge, I trade them a lot, right? These ones have been doing a little bit better. Rising wedge right here, fine. Over here, symmetrical bullish, doing not so good, but it's fine. Oh, the triple top isn't the best one right there as well. And you can go over here, scroll over, and you can kind of see where the majority of your money is coming from and which is actually losing you money here, like the inverse head and shoulder, like I told you guys in the pennants, and triple top over here, right? And how you guys are trading it and how you guys are making money off of it. But this is free for all members, so I'll put a video up for you guys later on. I need to do more members videos too. I've just been overwhelmed. But yeah, I mean, it really comes down to like looking at the data. So you should know what it's telling you is, hey, well, if you see an inverse head and shoulder, trade it, but don't trade it with your money. Trade it with the paper money and see what you're doing wrong and learn from it. But you can see over here, we're making money off of ascending triangles and double tops and rectangles and it looks like symmetrical triangles, right? So trade those and you're going to be able, like if you want to put money on something, put money on those. So you can look at the data and you can see what you're actually good at. As investors, you have to have a certain arrogance to think that you can trade in the market. And that arrogance can be your undoing if, I'm not saying you're arrogant. Well, yeah, in a small way, we're all arrogant. But you have to be able to tell yourself that, hey, you have to be able to like talk to yourself frankly and be like, hey, I am not good at trading this. Therefore, I will not trade this with real currency until I reach a profitability rate of 70%. And once I do that, then I feel more comfortable injecting my own capital into the position. But until you guys can look at the data and say, hey, I should be trading, I am 70% profitable on paper trading with ascending triangles or double tops or double bottoms, then I myself am not going to be trading those with real capital. But you have to be able to be honest enough with yourself to tell yourself that, right? And that's where most traders don't do it. That's why I always look at a lot of the other YouTubers out there who tell you guys, you know, it's easy to trade and stuff like that. You know, it's not easy to trade. I put out indicator tutorials and stuff like that for you to help you guys out. But in reality, you know, it's not easy. I think a lot of you guys know this, but I see a lot of you guys making money, consistent money, right? But that really comes with experience and taking the time and, you know, being very patient about it. But at a certain point, you guys will have to figure out what that exact workflow for you guys, which encompasses for most of you guys, since you guys have jobs, right, Monday through Friday, spending the majority of Sunday, I would say about 5-6 hours of Sunday, maybe not even that much, but, you know, at the beginning, it'll be more like that because you're also learning, going through basic technicals and doing that stuff too. This Sunday, I'm going to Vegas, but this Saturday, I will do the technicals for you of a bunch of different stocks out there. And I'm only in Vegas until Thursday, I believe. So I'll be able to do the next one for you, no problem. And so for the members out there, I will do those technical videos for you, and I'll just give you guys the technicals that I think are important. And right now, you've already seen some of those for Apple. We're seeing a breakout there. The Nasdaq is breaking out today. They're both kind of resting up against some of those Fibonacci extension levels, etc. Right? So as you kind of take your time and learn what to be doing here, you'll be fine. But definitely, I would say read books. They are much more useful than you think, and you can apply any questions that you have off of those books and search for the answer on YouTube. If you're just not comprehending it all the way, or the book's not doing a good job teaching you, you can always just go, okay, well, they're saying I need to do this log stuff, or I need to have my chart set up a way. So I don't know, what would the book tell me to do? Maybe they would say you need to have a controlled margin on the top and bottom of at least 15% and do not go below that for your charts. That's really nitpicky stuff here. But like if I go over here to market chart here for Bitcoin, let's go 5 minute, I guess. You see how you can see all this right here? Some people have a bad time of trying to put too much data in the chart, so they do this. Oh, there we go. They make the margins too small. 0% margin, 0% margin. People want to see as much data as they can, but it doesn't really make the chart look it makes the chart harder to read, right? Now you can still read it. It's not like you can't see there was a small breakdown here on the 5 minute chart leading to Bitcoin coming down. It's not like you can't see that there was a little bit of resistance up here that I showed you guys in the other one as far as a double top forming up, right? But you know, at the end of the day, you're probably just going to re-shrink it down here. So let me go back over here. Let's go back over there. Let's put this back to 20. So, and I'll make more videos about how to use TradingView as well. Maybe I should do the symbol tab of TradingView, the status line of TradingView, scales, appearance, trading, events, right? Right. So maybe I can do that for you guys as well here. I don't think that'll be too much of a problem on my part. Because I have been enjoying making these tutorials for you as far as indicators and how to use stuff, and you guys have been responding by watching the videos for longer periods of time and watching them even more, which I appreciate. So thank you guys for watching those videos. But right now, Bitcoin is clearly breaking down, and everybody's just waiting for the next 10 minutes here for the Fed data to come out. Excuse me. Let me get out of this stuff here. Nope. I don't need to make any changes to that. Nope. We can leave the whale stream up here. StormX. I go close that for now. There we go for there. There we go for there. All right, there we go. If he says 25 and pause, it will rocket. Hey, teaser. Exactly. No, exactly. That's why there's more opportunities for the market to pop right now than drop, right? A lot more opportunities to pop than drop right now. And hey, Slick Rick, do I own Crow? I do own Crow. Small amounts of it. I would buy more if we did have a crash. For me, there's a few coins I own that are exchange tokens, like the KuCoin, the BNB. I own a lot of BGB, but I've been scaling some off with Monica because BGB has been tearing up a new one for the markets. BGB is one of those coins. It's for the BitGet exchange. Right. I bought this all the way back over here like a long time ago at 6.5 cents with you guys. Like this is a long time ago. It did a whole bunch of hot nothing for a while. Then of course, all of a sudden it boomed, and that's what happens in these situations. I remember with us and Cheap. I remember that was a big idea too there. And then now, you know, it went up as high as 52 cents. Now it's at 40 cents. It dropped all the way to 31. I bought some more. I sold some up here, bought some more down here, and it's all the way back up. And now it's like flagging again. So, you know, it's interesting. We're about to have a death cross here on the daily, which makes me believe we're going to be coming back down here. But it has been some pretty nice move. BGB's been something I've been looking at. And then the other one is Fairdesk, who sponsored the channel now. I'm looking for them to have a token here pretty soon. And when they do, I'm going to be loading up a lot on it, like a few $1,000. And then just kind of waiting to see where it goes from there. And hey, Kevin, they'll protect the banks, not the taxpayer. Technically, to me, both are just bad for the banks. Both are bad for the banks. But because they've already protected the banks, in my opinion. That's why. Like they've already gave them all this capital. They've injected like almost $200 billion into the banks. I think it's probably even more by now because that was the numbers from last week. The banks need the help. The banks definitely need the help here. That's for sure. But we'll have to see. Ooh, are we going to have a little bit of a double bottom here? That'd be kind of nice to see on the 1 minute chart. We'll keep track of this one right there. Hope we're gonna have, if we're gonna have one, that'd be a nice little reversal. Tested it out, a little bit of a breakout. There we go, a little move. Only thing is we're kind of choppy over here, which I don't like. But we'll see how this pans out. Because now we're just really dealing with this level of resistance right there. All right. There you go. Nice little surge. That's what you want to see. Move that down there. Yeah, there you go. Let's see what happens in this magical moment. There we go. All right. According to the watch tool today, 25 next meeting and pause. I think that's the most likely cause for sure. That'd be the most likely one. I'm watching CNBC right now, and it seems that it's almost time, guys. We have about 6 minutes left, but there's just some, you know, old guy talking. I love how these guys talk with headsets, though. I think it's like headsets is still very used in Wall Street nowadays. But yeah, there we go. Now we're going to do a retest. Let's switch to the second chart. Technically, we did retest the second chart, but that's not enough. So we'll have to see if we can get a nice larger move from there. There's the retest, I guess, and we'll have to see if we can pop up or not. Again, everybody's just waiting for the rate hike. This is why it's probably not wise to be trading right now, to be frank. But if you guys want to take a YOLO, your YOLO days are here, right? And hey, legends have it, they will do whatever it takes to make old Joey look good in their party. I mean, right now, yeah. I mean, yeah, there is a little bit too much of a linkage there, but I would say between the Democrats and the Federal Reserve, there really is that. And I think that thought process, though, it all goes back to Jerome Powell wanting to keep the job, though. Back to what we saw last couple of years over transitory. I think, you know, him and Janet Yellen were really pushing that hard, and the media bought it, and the public bought it, right? It's only going to be here for a little bit of time. It'll be fine. Then all of a sudden, boom, 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 boom. It's still here like a couple years later, right? Or a year later. Logical thoughts don't work for people with thousands of shares in the market. 0.75 of a full point is needed, but Powell doesn't have the balls for that. See, I was calling for a half a point a while ago, back in like January, but nope, 25, whatever, you know. So, I don't know. It's a different thought process for sure, my man. It's a different thought process for sure. And hey, Dale, GameStop has been pumping up a lot. I know CNBC doing that. Have a nice little conversation here. And hey, Ark, I don't know why it's like that for Discord as far as I'm concerned. Let me do this for you right now. Let me go over here to Discord on my end, and I'll change the link underneath this stream. But what do you call it? It's not active, as I said. It's not active at all. Maybe that's part of it right here. Let's go over here to investing. Got it. server setting, server insight, invite people. No, never expires. Generate new link. Copy. Okay. I'll post it in the comments first, and then I'll go over here very fast and I will edit it into the description. So if you guys want to join the Discord, which is dead, frankly, I will have it right there underneath the copy trade link that you guys will see. So let me put that right there. Discord link. There we go. And it should work out. I'll have to double check to make sure that YouTube isn't like re-automating an old one or something like that in there, and I'll figure it out. But I should update here, I hope. But I'll remember tomorrow to also update it. Hopefully the next day I'll just put a little sticky note on my screen here and it should work out. Squeeze this back down here. Sorry about that, guys. There we go. Okay. We got breaking news.
Welcome, everybody, to a special edition of Power Lunch alongside Kelly Evans. I'm Tyler Mathis.
Oh, breaking news. The decision is imminent. I hate when they do that. I hate.
From the biggest Fed decision.
Okay. Hold on. All right. We'll do it in a little bit. Again, I have like a 30 second or 15 second lag, so you guys will actually know when it hits before I do, or we'll on at the same time, but if you guys are only watching YouTube, you'll hear that lag a little bit different, okay? Is it time to sell a house in Texas market? I mean, I would say sell at your own leisure. It really depends on what you're looking for there as far as your market, how you're doing. I'm not a Texas real estate agent, so I have no idea what the market is like in Texas. I tell you up here, a lot of people are looking to sell their houses up here in Washington. But, you know, that's because tech people are afraid they're going to get laid off, right? And hey, Puma, what's up, Mike? Missed all the news. Why is GME going up? They had their first profitable quarter in like 2 years, so GameStop is going up because of that. It's been a crazy, crazy day as far as they're concerned. And hey, Daily Double G, are you going to stream the FOMC meeting? Yes, I am. It's in 2 minutes time here, guys. 2 minutes time, and I'll pop it up. My head keeps on drifting out of the screen here. But yeah, 2 minutes time, I will be streaming it. So we'll have the announcement on CNBC, which you guys can see right here, ready to go. And then once he starts talking, which happens about 15 to 30 minutes afterwards, then I will kind of shift over to him talking, and I will hide my head, or at least make my head very small. My head's a big size already. It's fine. But yeah, I'll move my head maybe a little bit more, squeeze it down a little bit more. But yeah, we'll be looking at that for quite a bit of time. Still says the same thing with the link post in the chat. That is so weird. I don't understand. New link. It said, oh, this is startups. Hold on, don't switch device. Okay, let me get out of this one. Let me get that one. Yeah, here it is right here. Yeah. Somebody joined yesterday at 11:07 p.m. Yeah, so it's working. So go right here, invite people. Hidden, use copy button. Edit, invite link. Expires never. Generate new link. Copy. Paste. Go. I don't know. After the stream is over, this is open up the Discord app. That's what happened. But after the stream is over, I will try to go into the settings here. Okay, let me see. App directory. Custom server template. Invites. I think it's paused. Never. It should be fine. Verified. Welcome screen. I don't know. I'll figure it out for you afterwards, but it should be working. If anybody wants to, oh, Bitcoin's going up a little bit now after that little bit of a test out here. Let's go back to the 5-minute chart. There you go. Oh, it's imminent, so it must be coming out now.
Story actually is. Let the record show that John Bellows says today's statement is going to be largely about banking stability more than about monetary policy, but we're certainly going to hear about that and inflation in just a few seconds' time.
All right, it's low, but you guys should have it by now. You guys should have, there you go.
Are we? And it is here right now. Steve.
The Federal Reserve raising by 1/4 point, by 25 basis points to a new range of 4.75 to 5%. It is the 9th hike in a row since the Fed began hiking in May 2022. The Fed providing some guidance saying additional policy firming may be appropriate. That's perhaps a bit of a downgrade from what they said last time, where they said ongoing increases in the policy rate may be appropriate. Now they're saying additional firming. We'll have to talk what that means. Now, they said recent developments, which seems like a euphemism perhaps for the recent turmoil in the banking market. They said recent developments are likely to result in...
Dude, TradingView is like having issues right now. There's so many people using it.
Those tighter credit conditions will weigh on economic activity, hiring, and inflation. The extent of these effects, however, is uncertain. Now, they left unchanged their year-end projection for the fund rate.
Oh, man, this is great.
Which suggests they believe they'll be hiking at least 1 more quarter point and then be done. They raised next year's funds rate projection to 4.3%, which you'll notice is below the projection for the year end. So there are some cuts built in by the Fed next year, but a little bit less than there had been before. They forecast a bit more inflation this year at 3.6 versus 3.5 for the core PCE. They said inflation remains elevated. Remember last time they said it had eased somewhat. That was gone from this particular statement. They said the U.S. banking system remains sound and resilient. On the economy, modest growth in spending and production, they've noted. Job gains have picked up and running at a robust pace. Guys, the one thing I'll notice from this thing is first the change in language for some additional firming may be appropriate. The other thing is almost no connection at all from their comments about the impact of tighter credit to the effects on the economy with policy, except for that little squishy language about what happens next. Kelly?
All right, Steve, thank you. Stick around. We have the markets shooting higher in response to this. But as we know, we get the kind of post 2 p.m. reaction, and then we get the Fed press conference reaction, then we get the closing bell reaction, and then we get the rest of the week. And by the way, Powell doesn't have a great track record for risk assets in that regard. But right now, the complex looks positive. The NASDAQ is up 0.5%. The Dow is up about 26 points.
So I'll put her back on in a second, but it was hilarious. I watched the position go from like negative 18,000 to like plus 7,000, then all the way back down to like 20,000, and now we're down $8,500, $8,000. Oh my gosh! Now down to $3,000. Now down 5,000. Now down 2. Now down 2,000. Okay, what do you call it? Talk about wild.
Very close to kind of 348, 349 area before it popped just a bit. The dollar index did the same thing. It dropped a bit. So what are we looking at in macro?
Oh, yeah. Before I go, everybody, remind me where you guys are from. I want to get the chat rolling again. Let me know what town you guys are from, or what city or what state or what country. I'd love to know.
Too badly. Everybody, of course, is monitoring what's going to happen with the next set of Fed meetings that happens in May. Are they going to do a quarter point or not? That's how it's turned so quickly. But there's nothing surprising here. Every trader I talked to was looking for 25. A few were actually looking for 50. Every trader I talked to thought stocks would be the better of it, and that all markets that they monitored, from interest rates to the currency markets with respect to outside the dollar, all these markets were going to rally, and they have been correct. And I will go on record thinking that the press conference is not going to take this away. I think the press conference, if anything, is going to accelerate these moves.
Bob, what do you make of it? We've seen a seesaw where stocks dipped lower, and now they're kind of trying to claw into these gains. Where's your attention focused?
Well, there were two options here, assuming that a 25 basis point hike was what happened, and that is what happened.
The Shire.
So the Fed could either pause and explicitly signal that they're pausing, or they could hike and simply say the economic conditions are a little uncertain. And it seems to be the latter one, and I don't think that's necessarily a bad thing. So,
and hey, Joker, I'll try to fix that. I don't know. Sometimes it always gets turned out with my. Sometimes it's always about my my gain or something. I'm not entirely sure. Let me back the mic up a little bit more, and maybe that'll help out a little bit more here. Yeah, back it up a little bit more. There we go.
acknowledged the banking crisis is kind of striking. They said recent developments
up $10,000
to result in tighter credit conditions.
Up 15,000, up 16,000, back down to 14,500. Now only down to 12,000, up $12,000. See, this is where you have that liberal stop loss for you guys. I'll turn on the volume for the CNBC just a little bit here. It's working though. Told you, 2 out of 3 were bullish. You go with the odds in this one. 18,000, 16,000.
The banking crisis, we have the tools to deal with this, and we are not done fighting inflation. And
if it gets to 20,000, I'll just close it. Oh yeah, I got to 20,000.
To stop our interest rate hikes, that would have been
23,000.
That's not what happened here, and that's why I think we're getting this modest rally right now.
David, what do you hear?
24,000, 28,000, 22,000, 25,000. Or cresting. Let me just close it.
What do you make of the statement as we?
Okay, whatever that closed at.
And the fact that their prediction of core PCE or inflation.
This is why you guys look at the second chart when you guys are exiting off of these crazy positions. Because remember, guys,
I'm not surprised by that because our own models were saying
failed to close. Well, yeah, it wasn't a trade. I like how it's messing up on a paper trade. Remember, guys, this isn't a real trade. This is just an example trade I did with you guys to trade volatile markets. I think it's because what do you call it's because of trading view is overwhelmed right now. You guys saw it kind of freezing around earlier, but I mean I don't care if it stays up there. I don't really care, but I don't like it. I don't like trading views monitoring system in order to see what your trade is doing. I like it to be off to the side. I hate that there's an extra line on the screen here. Hon, you are my broker, dude. You are my broker. It doesn't matter. The way my mindset though is like why I'd be trading this is this, guys. Remember, we have that big boom, and then once Jerome Powell starts speaking, everything starts to moderate a little bit. That's usually what I'm looking for here. And this was nothing more than a day trade. You guys know how I feel about day trades.
Well, our view was that they were going to raise 25 with another 25 to come. And
I'm going to refresh this very fast. I don't like that the line is still there.
They didn't. I think it's really interesting to focus on credit and not financial stability.
Yeah, now it disappeared. Or maybe, wait, if I go back to 5, is it still there?
Few weeks, and as we all know,
yeah, all right,
it was getting tighter before.
All right, but that was a fun trade to do with you guys live. I mean, even if it was a fake money, whatever, I don't care. That's the type of trade I would have done with the $28,000 support. You buy kind of on one of those dips after the breakout, and you kind of watch it play out. But I mean, again, you know, you can't be too worried about the drop until it hits the 28,000 support level, right, or the stop loss level. Let's go back over here to the 1. There we go. All right, there we go. So I'm going to turn the volume back down here. As we learn more, as we get closer to that conference, there, guys, I will be talking to you guys a little bit more here. Let me move this down a little bit there. Oh, my overall microphone level was actually too high on that Streamlabs. I think it went up a little bit more here. But yeah, there you go. That was a nice little day trade with you guys. A fake trade, of course, but it was fine. Maybe I should do the trade on Fairdesk with you next time. I think that'd be kind of fun. It's just the only thing when I do Fairdesk trading or BitGet trading or anything like that, I don't want to keep turning back and forth. The connection attempt failed. Yeah. What do you call, you guys can't see it right now, but what do you call, TradingView is getting some errors right now. They're having some issues. That's interesting. There must be a lot of people using it because they are getting overwhelmed. And see, aren't you glad I sold right here as we were cresting? And I told you guys, this is why the second chart can be very important, especially for you scalpers out there when you're looking for a good exit. Because now you got to worry about all that shit. Who wants to deal with all that shit? Nobody does. Remember, guys, sell up high so you don't have to worry about all the shit afterwards. I haven't said that phrase to you guys such a long time, but this is a phrase you guys should know. Now we're coming back down a little bit more, right? As the Fed comes out, more moderate, everything moderates back out. Now, I used to trade Forex a lot. This is a strategy I used for Forex currencies, and I'm applying it to Bitcoin, all right? So what you saw there was me buying at a neutral level after a breakdown or breakout, in case you guys want to copy this strategy down the road, paper trade with it if you want to, right? We bought way over here, right? Way over here. Oh, is it over here? This is one I'm trying. Maybe somewhere over here. Maybe something over here. I'm not too sure. But anyway, not entirely sure. Oh, we'll just stay over here because it's breakout. But yeah, and then you kind of wait it out, and then, but what happens? Within this fury of the moment, you'll have one opportunity to sell if you're short. You have one opportunity to sell, maybe two opportunities to sell if you're long. I would say usually have 1-to-1 odds. And then within that volatility, you guys sell and you make your money. But you don't hope for some type of big parabolic move up here, or you don't hope for some big parabolic move over here. You wait and you wait until it happens, or until your stop loss is hit, one or the other. It's a great strategy. I use it a lot for Forex. If you guys go over here and maybe we look at the pair of the euro versus the dollar, pound versus dollar, something a little bit easier. This makes it a little bit more difficult here. I would say that makes it more difficult. But when it comes to Bitcoin, it's not too bad. Now, with Forex, it pumped. Let's see. Well, I guess you'd be long here, wouldn't you? Because everybody was assuming a 25 basis point hike. For those 56% of you guys that thought it was going to be 25 basis point, you guys would probably have this methodology. But boom, breakout, you want to buy that, but that'd be kind of hard right here. On the other side, you'd be shorting. Oh, no, is there a reason to short at this point? You'd be, yeah, there's the reason right there. That's why you'd be shorting. Pound wouldn't work that much. Yen, oh, wow, much more volatile. Wow. The market has been more volatile than normal. I guess this is a crazy rate hike, I guess. People had their bets on a little bit differently. Yeah, there's that support breakdown right there as far as the US dollar index too. Wait, what? Why is the dollar index down? This should be up. I guess it's that talk afterwards, right? The dovish rate hike that we were talking about. That just crushed the dollar. Yowza. Remember, the dollar should be going up if we're doing rate hikes. The dollar should be going up. Whoosh. All right. Let's keep on watching this, guys. I'm going to get rid of some of these lines over here, though, because they're kind of a nuisance at this point. There we go. Watch this play out. You can see how ugly this minute chart looks. All the volatility here. And again, we're finding some support right here at 28,445. If you guys wanted to do a theoretical, another buy here for a short-term bounce, you could. But this is more of a scalper. Like, I'm going to try to trade right now. Let me see. Create new order. Done paper trading. Yeah, I know paper trading. Maybe I should open up a TradeStation account just so I can trade with you guys live on here when it comes to crypto. No, what do you call it? Their system is overloaded right now. TradingView system is so overloaded. When I first signed on earlier today, and you guys know I'm using the chart primer indicators and the moving averages, my moving averages took about 5-10 seconds to load. Moving averages took that long to load. That's so weird. So yeah, they're definitely having some issues right now. That's fine. I'm not going to be mad at them. They have a great service. But yeah, it was, dude, freaking TradingView. Get on my nerves, but you know, it's okay. They do it every now and again. I see Florida, Minnesota, Cleveland, Anaheim, California, Detroit, Apple Valley, California. I haven't been down there in a while. Florida, that's shy of Middle Earth. I love myself some Middle Earth right here. And then we got Delaware, LA, California, Compton, California. Woohoo, there you go, Alex. Or Axel, excuse me. Let's see, New Zealand, California, Pretoria, South Africa. Ooh, Stockholm, Sweden. Where'd they go? 25 Island? Yes, 25. There you go. And let's go right here. Yeah, we can listen to the experts on CNBC very fast. We can listen to the experts. So right here.
To firming. The nice thing about firming is firming could mean one increase, or it could mean two increases, or it could mean three increases. If you don't do that, you have interest rate increases. You either have to say interest rate increase or increases. So that allows them to get away from the singular plural issue with regard to further rate hikes. So maybe that's what they did, because as you said, they've still got this 5.1% at the end of the year, and the market does not believe that, and I don't really believe that either, because we've got a lot of, what we're seeing here is we've had tighter lending conditions before all this happened. I can't believe that after the last 3 weeks that banks are going to be more willing to lend, or small businesses are going to look like a better proposition to loan officers than they did a few weeks ago. So I think you're going to have a lot of economic tightness as this year goes on. And by the way, also, oil prices have come down, inflation expectations have come down. So, people have said the Fed is between a rock and a hard place. I think the Fed is between a rock and a soft place, because we've got softer inflation, we've got softer economic growth. They should just stop and not
help the banks. Just stop. Don't support. Yeah, it's
next year. That's exactly what Rick just said. Katie, let me turn to you. David quibbles with the idea that the terminal rate may be 5.1%. He doesn't think it's going to get that high. Do you?
We do, actually, at this point. It might not get that high in May. There might be an opportunity here for the Fed to skip a meeting and assess the data as well as the cumulative impacts of all the rate hikes that they've that they've put in place so far. But until and unless we really see inflation start to fall in earnest consistently much faster towards the Fed's target, I don't think they can really get away with pausing. And I think that that Powell probably at the presser will take the opportunity to take a page out of Christine Lagarde's book by striking that separation between the financial instability issue and the inflation issue, and making sure that we all recognize that you can't have one without the other, and that they have separate tools, separate toolkits to address each. So I think the Fed has to remain really committed on this inflation issue, and that's going to keep them a bias towards tightening policy and hiking rates.
And yet, John, the
okay. There we go. Put my volume down a bit more. So now, guys, we are waiting for Jerome Powell to come out and talk with all of us and see what he has to say. I don't think, again, he's going to be, looks like hawkish or dovish. I don't know yet. I would say he in January, he was much more dovish, but I think he got in trouble for that, seeing after how the market just kind of rallied there. But I don't know, like, do you guys think he's going to have a hawkish meeting or a dovish meeting here? Sorry, Loki's over here. Hey, Loki. Hey, Loki. Boo, 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 boo. Come here. Up, 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 up. There you go. You want an ice cube? Sorry, all the ice molded together, dude. I'm sorry. I can get you. I don't got anything for you, buddy. I'm sorry. I got no more treats. All the treats are in the room. Sorry. There you go. He can get head rubs though. Hey, Tony, come to town. I do need to go up to California more often. There's always some good meetings I always miss down there. I think there's like even an NFT meeting I need to go to down there. And I'm not much of an NFT guy, as you guys know, but I do have friends in the NFT space that are like artists. So I do need to say hi to them. They spend like every Thursday at a hotel, which is pretty chill. Yes, let our dollar collapse completely. Guys, our dollar is, and it depends on how you want to look at it. We, for inflation's sake, we want the dollar to come down. For how everything works in the world stage, we don't really want the dollar to come down. But there was also some news coming out this weekend about other countries switching over to the yuan instead of using the dollar for some of their transactions. And it seems like the Chinese are making moves while we're kind of preoccupied with Ukraine right now, right? I would say most of the State Department is on the Ukraine issue right now. Some of us are on, some of the State Department is on these other issues, but our government is really preoccupied with Ukraine. We're not really preoccupied with all this other stuff going on in the country, or the world, excuse me. Currents in rainy, chilly North Georgia. Listening next week from Southeast Florida. Can't wait for some sun. Ooh, that sounds really, really nice. Some sun. We don't get much sun. Loki's over here. Oh, you guys can't see him, but he's over here just chilling out. I'm rubbing his head. He's like, this dog is very, very pampered. Very, very pampered. I'm scratching his nose. Oh yeah. Yeah. But yeah, I need to go out to a little bit more sunny spot. Well, that's why I'm going to Vegas. But I don't think the weather next week while I'm in Vegas is going to be all too good. I think it's going to be in the 70s or something. I'm still going to spend like a full day at a pool though. I'm going to chill out. I'm going to be at the pools at the Signature MGM, which I don't think they're the best, but they're fine. I just wanted to room away from the strip a little bit, but still like within walking distance. I'm there for 2 nights at the 2 nights at Signature MGM, and I got the 2 nights at the Aria. I think the Aria pools are a lot better. Ow, dude, don't claw yourself into my arm. That hurts. Yeah. Oh, don't snort at me. But yeah, so I'll probably be at the pool at the Aria. They have some pretty chill pools. I'll be having fun over there. 73 and sunny here in South Georgia. Ooh, there you go. Georgia, I love Georgia because every time I go down there, there's always a huge rainstorm, and then after the rainstorm, it's perfect weather. But I can't stand humidity, so it's always hard for me to go down to the south. It takes me like 2 days to get used to it, then I'm fine. But that first day after walking off the airplane, it can get pretty brutal. All right, everybody, but let's go over here to maybe a 15-minute chart, and you can see the volatility we saw with Bitcoin. Let's see if we can kind of follow what's going on with the rest of the market here. We got the NASDAQ. NASDAQ is pumping right now. Look at that. Into resistance levels. We'll see if it can go up a little bit higher. Dow Jones, not pumping as much, but it is moving up. SPY not pumping as much, but it is still moving. That's good. Ethereum coming down a little bit like Bitcoin. Dollar index, look at that, still coming down here off of a rate hike. Oh wait, let's see. There's more breaking news here. Let's see. Oh no, it's just the same. Fed raising rates at 75 basis points. ADA more sideways. Dogecoin more sideways. I would say 15-minute chart. But oh, Dogecoin pumped before everything else did. Oh, that's interesting. ApeCoin sideways, still doing okay. AVAX up. AVAX sideways. We're not looking too bad here, folks. We're not looking too bad. Pro down a little bit. Sheeb. That's a stable coin. Don't worry about that. Anything really up? We got GTC up a little bit, but that was from earlier today. Still moving up slightly here. Leo is down a little bit here. And what else is here? EOS taking some losses, but there doesn't seem to be anything too crazy. I think the only thing that's really down a lot as far as what I would expect is XRP. And that's primarily because XRP had a really great rally yesterday, right? I mean, it's just coming back down from that rally we saw yesterday. Nothing wrong with that. As soon as we started breaking down below the support level right around there, you knew there was going to be some weakness there, especially, let's go over here, right? Break it down, retest, continue the drop down. Now we're just having a nice little flag. 2-hour chart. Yeah, that's probably what I thought, yeah. So it's looking okay right now. Trying to bounce off. There we go. Yeah. But short-term, guys, Bitcoin is all over the place. It's fine, but it's definitely not the prettiest of charts out there. There we are. And hey, Joker, I got some NFT collections. What do you call? I have like 3 NFTs I bought. I've been gifted like 20 from friends in the NFT space. I don't know much about them. Like, all I know about NFTs is what they can be used for practical stuff, right? As far as like their value, the good thing is their value is tied to like Ethereum or other currencies out there. So as Ethereum rises, their worth becomes worth more, right? In theory, because people are still going to be willing to pay as the price increases. I like NFTs more for their ability to be used as keys to unlock certain vehicles. So, let's say I have a bank account and I want to be able to access it, but I don't want the bank to be able to ever access it. I can have my one NFT key. That NFT key could be the only thing that could ever open up that lockbox. That's what I'd like about it. I think that's like the really cool part about NFTs. That's the practical use I could see for them. Being able to unlock certain things, or you could imagine a Taylor Swift concert. If you're one of the first 5,000 people to buy tickets, you get an NFT. And the NFT unlocks the ability to go to Ticketmaster, and buy tickets for the first time next time as well, right? That type of stuff. From everything else, I don't know enough about it. I have a friend that has a small YouTube channel that talks about it. I met him at an NFT conference in Seattle when I was NFT curious, as one might say. I go over here to Twitter. Wonder what Twitter's talking about this as well. Oh no, this is from a while ago. This can't be new. Look at the quality of that video. That has to be old. That's totally old. That has to be old. I think I've actually seen that before as well. Counter-Strike 2, World Water Day, FOMC. Everybody's talking about it, at least right now. Traders waiting for the FOMC. Bears and the Bulls. That's pretty much us right now, guys. That's pretty much us. At least we're all sitting together happy, or stern, I guess you might say. All worried about our bank accounts. 30% banking system. Yeah, the banking system is not happy right now. Let's see. Turn money printer on, let the economy collapse. Yeah, that's really what it is. That's really what it has to do. At least you didn't turn the money printer on. Let the market collapse. We can pick it up from the ashes, right? The statement from the Fed. Republican former President Trump in 2020 predicted 1929 style crash. Weak men create tough times. So far, it's not too bad. Let's see. NASDAQ since record high. Wait, what? Since record high? The record high is the record. Oh, I see down. Okay, I see what you're saying. Okay. Wait, what? The NASDAQ from the record high isn't. Oh, since 219 close. Okay, that's not the record high for the NASDAQ, is it? But yeah, and J. Powell, we trust recession, inflation. Oh man, finally here. Okay, he's there. People are getting ready for the statement right now. So I think in the next few minutes, guys, we should hear Jerome Powell up and running here. Okay. Let's see. Anything else? Powell up next, expecting a rate cut in some dovish tone. He raised rates too fast and he knows it. Oh, Jim Cramer doing it again. I shouldn't have guessed. It was Jim Cramer that did it. Oh, it's not there anymore. Oh no, this is from a few days ago, I think. Yeah, it's from a few days ago. Let's see. Film from regional banks. GameStop will cause more covering than this. I'm not just about next futures or any others. Okay. Anything else going on right here? We all doomed. Jesus, the stuff going on here. Isn't that's from a movie? I think that has to be from a movie, but it has a Saudi Arabian flag on it, so who knows? I wasn't talking about one of my friends' channels, but it doesn't matter. It doesn't matter. But yeah, we're almost there, guys. The Fed's about to speak in a few minutes here, and once Jerome Powell comes out, we'll be listening live to him, and I'll be putting him on a little bit larger here. But the 50-minute chart, guys, just looks incredibly hideous. That nice spike though is beautiful, absolutely beautiful right there. Absolutely beautiful spike right there. We'll go back over to the 1-minute chart. We'll just have to accept that it's going to look a little bit ugly for the next few minutes here. I've minted a couple thousand NFTs total, 3 collections so far in Algorand. Ooh, there you go. What do you call it? That is a lot, Mr. Joker. That is a lot. What do you call it? The text that? Oh, it is real? Oh, they turned the money printer on? What do you call it? Well, they turned it on for the banks, not for us. They turned it on for the banks, and therefore it will go to us, I guess, eventually. Crim Jamer, yeah, right. NFTs total 3 collections. Oh, no, wait. Oh, the Texas explosion was real? Why isn't it trending? Gosh. I don't follow stuff on Twitter as much as I should. Uganda, Dick Van... Oh, yeah, I saw Dick Van Dyke this morning. DirecTV, Mod Squad, Texas. Okay, what is search Texas? Texas. Damn. This is like a 90s, 80s style footage of an event happening today. Damn. Oh, so that's not, yeah, there's not much happening with Texas. Oh, there is. Oh, you guys can't hear it. You don't have to worry about hearing it. Yeah. Fire reported at Innos chemical site at Pasadena area in Texas after possible pipeline explosion. Uh-oh. That means gas is about to get a little bit more expensive here. Yeah, whoosh. It has to be, yeah. It's breaking right now, guys. So we're just seeing videos. Yeah, all I'm seeing is like March Madness stuff. Latest. Texas oil. Okay, yeah, not enough information as of yet. All right, but the Fed's about to come out here and speak in a few seconds, everybody. We're awaiting it. CNBC is awaiting Fed Chair Powell's press conference, and then we'll be going. See. And hey, Joker, if the printer is on, it doesn't matter who it's for. Oh, yeah, I know that, but come on. What do you call it? Like, the printer's been on for, I would say, a week, and they've already ruined 4 months of monetary policy. We're not looking good either way. Hello. Come here. Up. Loki says hello. Dude, you got to stop using my shoulder as like a, he likes to go and then claw to get a nice little grip on there. But yeah, he'll be out there in a few seconds. Oil painting. Oh yes, I thought you were saying the opposite. Oh yeah. Because so negative. Yeah, exactly. Yep, you're 100% right, Mr. Joker. I really would just want to see Jerome Powell talk here, but what do you call it's going to give us a little bit of time here. He's taking his time. Jerome Powell takes his time with all this type of stuff here. Let's see. But, you know, and I mean, at least the NASDAQ is oh, no, the NASDAQ, they pulled a Bitcoin. It gave back all the moves, too. The NASDAQ is lagging Bitcoin. I think that's actually hilarious right now. The NASDAQ is lagging Bitcoin. Back to Bitcoin here. Yeah, that's interesting. We don't see that happen too often, do we? Oh, here's Jay Powell. Okay.
Thanks.
Good afternoon. Before discussing today's meeting, let me briefly address recent developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings and the banking system are safe. With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par. This program, along with our long-standing discount window, is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. Turning to the broader economy and monetary policy, inflation remains too high and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year. In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. And nearly all participants see the risks to GDP growth as weighted to the downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%. The labor force participation rate has edged up in recent months, and wage growth has shown some signs of easing. However, with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories. Core PCE, or excluding those, core PCE prices rose 4.7%. In February,
Bitcoin's going down.
The change in the CPI came in at 6%, and the change in the core CPI was 5.5%. Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. The median projection in the SEP for total PCE inflation is 3.3% for this year, 2.5% next year, and 2.1% in 2025. The process of getting inflation back down to 2% has a long way to go.
NASDAQ,
is likely to be
Dow Jones, SPY. NASDAQ
Despite
is like
elevated
now.
inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a 1/4 percentage point, bringing the target range to 4.75% to 5%. And we are continuing the process of significantly reducing our securities holdings. Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. We will closely monitor incoming data and carefully assess the actual and expected effects of tighter credit conditions on economic activity, the labor market, and inflation. And our policy decisions will reflect that assessment. In our SEP, each FOMC participant wrote down an appropriate path for the federal funds rate based on what that participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025. These are little changed from our December projections, reflecting offsetting factors. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation. We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right, here we go, guys. Questions time.
Thank you. Colby Smith with the Financial Times. How confident is the committee that the recent stress that we've seen and you've alluded to is contained at this point, and that deposit flight among mid-sized lenders in particular has ceased?
Thanks. So I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe. Deposit flows in the banking system have stabilized over the last week. And the last thing I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
Okay, just a quick follow-up. I mean, given all of the stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered for this meeting?
So we did consider that in the days running up to the meeting, and you see the decision that we made, which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really it is that the intermeeting data on inflation and the labor market came in stronger than expected, and really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over the course of the year, more than we'd expected at the time of the SCP in December, the time of the December meeting. We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we sustain that confidence with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening in credit conditions for households and businesses, and thereby weigh on demand, on the labor market, and on inflation. Such a tightening in financial conditions would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's not possible to make that assessment today with any precision whatsoever. So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes some policy firming may be appropriate. So going forward, as I mentioned, in assessing the need for further hikes, we'll be focused, as always, on the incoming data and the evolving outlook, and in particular on our assessment of the actual and expected effects of credit tightening.
Steve.
Mr. Chairman, can you explain the difference between ongoing rate increases and firming? Does firming imply a rate increase per se, or could policy firm without you increasing rates?
God, these people, all for show.
No, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some, as opposed to ongoing. So we clearly were, what we were doing there was taking on board trying to reflect the uncertainty about what will happen. I mean, it's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case, the path will might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time, and in principle, if that means that monetary policy may have less work to do. We simply don't know.
Do you have concerns that the hike you did today could further exacerbate the problem in the banks?
No, I mean, with our monetary policy, we're really focused on macroeconomic outcomes. In particular, we're focused on this potential credit tightening and what can that produce in the way of tighter credit conditions. I think when we think about the situation in the banks, we're focused on our financial stability tools, in particular our lending facilities, the discount window, and also the new facility.
Nick?
Nick Timmeros of the Wall Street Journal. Chair Powell, in your testimony 2 weeks ago, you had indicated you thought the terminal rate would be higher. Obviously, that was before the stress in the banking sector. And I realize there's a lot of uncertainty, but can you explain at all to what extent your forecasts or those of your colleagues or those of the board staff incorporated today a material tightening of credit availability because of the stress in the banking sector, or are you waiting to see it in the data before you incorporate that potential tightening into your forecasts?
So, we've just come from an FOMC meeting, and the people who write the minutes will be very carefully counting. But I'll tell you what I heard. What I heard was a significant number of people saying that they anticipated there would be some some tightening of credit conditions, and that would really have the same effects as our policies do, and that therefore they were including that in their assessment, and that if that turned out not to be the case, that in principle you'd need more rate hikes. So some people did reflect that in their SEP forecasts. I think there may also just have been, remember, this is 12 days ago. You know, we're trying to assess something that just is so recent, and it's people, you know, it's very difficult. There's so much uncertainty. So December was a good place to start, and we wound up with very similar outcomes for December. And you know, in a way, the data in the first part, the first 5 weeks of the intermediate period, pointed to stronger inflation and stronger labor market. So that pointed to higher rates, and then this latter part, kind of the possibility of credit conditions tightening, really offset that effectively.
To follow up, have you considered at all whether your primary tool, the funds rate, is going to be enough to sustain the kind of tighter financial conditions that you believe will be necessary without doing significant damage to the banking sector? Have you, for example, considered changing reserve requirements, selling assets out of the system, open market account, as a way to better achieve tighter financial conditions that don't accelerate deposit erosion, for example, from banks?
You know, we know that we have other tools in effect, but no, we think our monetary policy tool works, and we think, you know, many banks, our rate hikes were well telegraphed to the market, and many banks have managed to handle them.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask, you, along with the FDIC and the Treasury, the Fed Board decided to invoke the systemic risk exception to allow uninsured depositors to be protected at these two banks. And I was just wondering if you could speak to why that decision was made. Was it purely a confidence issue, or was there a concern that there would be some sort of economic contagion or financial contagion from the failure of these banks?
The issue was really not about those specific banks, but about the risk of a contagion to other banks and to the financial markets more broadly. That was the issue.
Okay, and then can you also, just to follow up, can you speak to the role that you will be playing in the Fed's internal investigation on its supervision and regulation? So
Vice Chair Barr is of course leading that review, and he's responsible for it in his capacity as Vice Chair for Supervision. I realized, you know, right away that there was going to be a need for a review. I mean, the question we were all asking ourselves over that first weekend was, how did this happen? And so what we did was early Monday morning we sat down and said, let's do this, and he was obviously going to lead it in his capacity. So I don't, you know, my role was to announce it, and I get briefed on it, but I'm not involved in the work of it.
Howard.
Hi, Chair Powell. Howard Schneider from Reuters. So I want to go back to your February press conference. You mentioned the word disinflation, I believe, 9 or 10 times, a process that you felt was, I forget the word you used, but gratefully underway or something like that. Is disinflation still occurring in the U.S. today?
Yes. I mean, what actually happened, Howard, was I got the question 12 times. So maybe it's a feature, not a bug. But But yeah, absolutely the same. The story is intact. So it's really three parts, right? Goods inflation's been coming down now for 6 months. It's proceeding more slowly than we would have liked, but it's certainly proceeding. Housing services is really a matter of time passing. We continue to see the new leases being signed at much lower levels of inflation. So that's 44% of the core PCE index, where you've got a story that's ongoing. Where we didn't have in February, and we still don't have now, is a sign of progress in the non-housing services sector, and that is, you know, that's just something that will have to come through softening demand, and perhaps some softening in labor market conditions. We don't see that yet, and that's of course 56% of the index. So the story is pretty much the same. I will say that the inflation data that we got, to your point, really pointed to stronger inflation.
If I could follow up on that, I was curious why you don't see more coming from the credit crunch, because it seems to me that's something that you'd actually welcome to a degree and expect. And are you not seeing more coming from that because you don't know, or because you just don't want to have another round of wishful thinking?
So it's really just a question of not knowing at this point. There's a great deal of literature on the connection between tighter credit conditions, economic activity, hiring, and inflation. Very large body of literature. The question is, how significant will this credit tightening be, and how sustained will it be? That's the issue. And we don't really see it yet. It's so people are making estimates, people are publishing estimates, and it's very kind of rule of thumb guesswork almost at this point. But we think it's potentially quite real, and that argues for being alert as we go forward, as we think about further rate hikes. For us, we'll be paying attention to the actual and expected effects from that.
Gina.
So far hawkish, guys. So far hawkish.
Gina Smilik from the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit, I know that you've got your internal review coming, but I wonder if you could talk a little bit about what you think happened with oversight at Silicon Valley Bank, and whether this suggests that something about regulation and supervision needs to actually change going forward. And I wonder, how can the American people have confidence that there aren't other weaknesses out there in the banking system, given that this one got missed, as you noted?
So let me say what I think happened, and then I'll come to
that's a good question.
The questions around supervision. So at a basic level, Silicon Valley Bank management failed badly. They grew the bank very quickly. They exposed the bank to significant liquidity risk and interest rate risk, didn't hedge that risk. We now know that supervisors saw these risks and intervened. We know that the public saw all this. We know that SVB experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, in a very, very fast run, faster than the historical record would suggest. So as for us, so for our part, we're doing a review of supervision and regulation. My only interest is that we identify what went wrong here. How did this happen is the question. What went wrong? Try to find that. We will find that. And then make an assessment of what are the right policies to put in place so that it doesn't happen again, and then implement those policies. It would be inappropriate for me at this stage to offer my views on what the answers might be. I simply can't do that. Vice Chair Barr is leading this, and I think he's testifying next week. So, but that will be up to him. So that's really where it is. The review is going to be thorough and transparent. It is clear, to your last question, it's clear that we do need to strengthen supervision and regulation. And I assume that there will be recommendations coming out of the report, and I plan on supporting them and supporting their implementation.
Sorry, and the final point, can we feel confident that these weaknesses don't exist elsewhere, given that they got missed at this bank?
These are not weaknesses that are at all broadly through the banking system. This was a bank that was an outlier in terms of both its percentage of
he's not answering the question. He's not answering the question.
Deposits, and in terms of its holdings of duration risk. And again, supervisors did get in there, and they were, as you know, obviously, they were on this issue, but nonetheless, this still happened. And so that's really the nature of the of the review, is to discover that.
Go to Mike McKee.
Michael McKee from Bloomberg Radio and Television. You've been very consistent in saying that the Fed would be raising interest rates and then holding them there for quite some time. Following today's decision, the markets have now priced in one more increase in May, and then every meeting the rest of this year, they're pricing in rate cuts. Are they getting this totally wrong from the Fed, or is there something different about the way you're looking at it, given that you're now thinking that moves might be appropriate as opposed to ongoing?
So we published an SEP today, as you will have seen, and it shows that basically participants expect relatively slow growth, a gradual rebalancing of supply and demand in the labor market, with inflation moving down gradually. In that most likely case, if that happens, participants don't see rate cuts this year. They just don't. I would just say, as always, the path of the economy is uncertain, and policy is going to reflect what actually happens rather than what we write down in the SEP. But that's not our baseline expectation.
Well, if I could follow up and ask, as you look forward into the rest of the year here, are you saying that what you see and the 5.1% basically consensus is based on it will be sufficiently restrictive, or is it leavened by the idea of you don't know what's going to happen? In other words, what should people think about in terms of how the Fed thinks about how far it is from the terminal?
It's going to depend. Remember, we're looking, for purposes of our monetary policy tool, we're looking at what's happening among the banks and asking, is there going to be some tightening in credit conditions? And then we're thinking about that as effectively doing the same thing that rate hikes do. So in a way, that substitutes for rate hikes. So the key is we have to have policies got to be tight enough to bring inflation down to 2% over time. It doesn't all have to come from rate hikes. It can come from tighter credit conditions. So that we're looking.
Guys, please do make sure to like. Thanks, Mr. Joker, for reminding me. Please make sure to like the stream, guys. It helps out a lot.
Significant any of those effects would be. So we're just going to have to watch. In the meantime, and obviously at the end of the day, we will do enough to bring inflation down to 2%. No one should doubt that.
Let's go to Rachel Siegel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. I know we've talked a bit about how Silicon Valley Bank was unique to a certain sector of the economy, but there's also growing concern that there are financial stability risks from the commercial real estate market and loans that will begin to roll over later this year and next, and that smaller regional banks also disproportionately hold those loans. Is there a risk that could mimic the kind of what we saw with SVB to banks that disproportionately are?
NASDAQ is still bullish. Everything else bearish.
Well aware of the concentrations people have in commercial real estate. I really don't think it's comparable to this. The banking system is strong. It is sound. It is resilient. It's well capitalized, and I really don't see that as at all analogous to this.
And one other question: would you be open to an independent investigation separate from the Fed's probe?
I welcome. It's 100% certainty that there will be independent investigations and outside investigations and all that. So we welcome, when a bank fails, there are investigations, and of course, we welcome that.
Edward.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Inflation has been rather sticky, so do you need help from the fiscal side to get inflation down faster?
We don't assume that. We don't give advice to the fiscal authorities, and we assume that we take fiscal policy as it comes to our front door, stick it in our model along with a million other things, and we have responsibility for price stability. The Federal Reserve has responsibility for that, and nothing is going to change that. So we will get inflation down to 2% in time.
And if I could follow on that, but they're working, the spending that's happened is working against what you are doing, right? So it's prolonging inflation?
You know, if you have to look at...
He's not saying no. He's not saying no.
From spending, because spending was, of course, tremendously high during the pandemic. And
he didn't say no.
Programs rolled off, spending actually came down. So the sort of fiscal impulse is actually not what's driving inflation right now. It was at the beginning, perhaps, part of what was driving inflation, but that's not really the story now.
Let's go to Neil Irwin.
Hi, Chair Powell. Neil Irwin with Axios. Two questions about aspects of the government's response on Silicon Valley Bank 2 weekends ago. First, why is this new bank funding facility done under Emergency 13.3 authority as opposed to expansion of the discount window, changing the terms of the discount window that's been around a long time? And second, can you discuss the Fed's role in the FDIC guarantee of uninsured depositors and why there's $143 billion on your balance sheet last week supporting that deposit guarantee?
Sure. So 13.3 seemed like the right, we have a little more flexibility under Section 13.3. We've done quite a lot under the discount window as well. We needed to do a special facility that was designed a certain way, so we did it under 13.3. Really no magic to that. It's only available in unusual and exigent circumstances, and it has to meet certain requirements, but it seemed to be the right place. So with the FDIC, we're lending to the, in effect, we're
thanks, Shannon. I appreciate it.
To the bridge bank. So that's where the funds came from, and it's a loan that's 100% guaranteed by the FDIC, so there's no risk in it for us.
Chris Rugaber.
Thank you, Chris Rugaber at Associated Press. The SEP suggests one more rate hike, as does the change in the language in the statement, and which suggests that you're perhaps nearing the end of a cycle of rate hikes. Do you feel, though, that if inflation remains high, you'll be able to resume additional hikes as needed, or have you somewhat tied your hands here with these signals about rate hikes coming to an end.
No, absolutely not. No, if we need to raise rates higher, we will. I think for now, though, as I've mentioned, we see the likelihood of credit tightening. We know that can have an effect on the macroeconomy, on demand, on labor market, on inflation, and we're going to be watching to see what that is. And we'll also be watching what's happening with inflation and in the labor market. So we'll be watching all those things, and of course we will eventually get to tight enough policy to bring inflation down to 2%. We'll find ourselves at that place.
Kyle.
Hi, Chair Powell. Thanks for taking the question. Kyle Campbell with American Banker. I have a couple questions about the balance sheet. First of all, I'm curious at what point the financial supports that the Fed is extending through the discount window and through its enhanced lending facility might be at odds with the objective of reducing the balance sheet. And I'm also curious what your thoughts are on not just the availability of reserves, but the distribution of them throughout the banking system, and at what point you might be concerned about it being scarce for certain banks.
So people think of QE and QT in different ways, so let me be clear about how I'm thinking about these recent developments. So the recent liquidity provision that has increased the size of our balance sheet, but the intent and the effects of it are very different from when we expand our balance sheet through purchases of longer-term securities. Large-scale purchases of long-term securities are really meant to alter the stance of policy by pushing up the price and down the rates, longer-term rates, which supports demand through channels we understand fairly well. The balance sheet expansion is really temporary lending to banks to meet those special liquidity demands created by the recent tensions. It's not intended to directly alter the stance of monetary policy. We do believe that it's working. It's having its intended effect of bolstering confidence in the banking system and thereby forestalling what might otherwise have been an abrupt and outsized tightening in financial conditions. So that's working. In terms of the distribution of reserves, we don't see ourselves as running into reserve shortages. We think that our program of allowing our balance sheet to run off predictably and passively is working. And of course, we're always prepared to change that if that changes, but we don't see any evidence that that's changed.
Katarina.
Hi, Chair. Katarina Saraiva with Bloomberg News. The minutes of the January-February meeting, the last meeting, indicate that you discussed the possibility of runs on non-bank financial institutions and the impact of large unrealized losses on bank portfolios. Can you talk a little bit more about that discussion, kind of what was talked about in light of that? And then why didn't the Fed do anything about that at that point to ultimately prevent, what happened this month?
I mean, to be honest, I don't recall the specifics of that. It's quite an interesting 7 weeks, but I will tell you though that there have been presentations about interest rate risk. I mean, it's been in all the newspapers. It's not a surprise that there are institutions that have had unhedged long positions in long duration securities that have lost value as longer term rates have gone up due to our rate increases. So that's not a surprise. I think, as you know, as it is now on the public record, the supervisory team was apparently engaged, very much engaged with the bank repeatedly and was escalating, but nonetheless what happened. And so that's really the purpose of one way to think about the review that Vice Chair Barr is conducting, is to try to understand how that happened and try to understand how we can do better and what policies we need to change. I mean, one thing is the speed of I'll come back to that, the speed of the run. It's very different from what
Quarter
we've seen
two, quarter three is going to be bad, somewhere in there.
That there's a need for possible regulatory and supervisory changes just because supervision and regulation need to keep up with what's happening in the world.
Can you confirm whether or not the board knew about these escalations by the examiners in San Francisco?
I will have to come back to you on that. Yeah.
Simon Urbanovich with The Economist. Thank you very much. Chair Powell, you've stated twice today that all depositors' savings in the banking system are safe. Are you saying that de facto deposit insurance covers all savings? Shouldn't Congress have a say in that? And just by way of example, if a bank with less than $1 billion in assets failed, are you promising to bail out all of its depositors? Thanks.
Well, I'm not saying anything more than I'm saying. So, but what I'm saying is you've seen that we have the tools to protect depositors when there's a threat of serious harm to the economy or to the financial system, and we're prepared to use those tools. And I think depositors should assume that their deposits are safe.
Go to Greg Robb.
Thank you, Chair Powell. Greg Robb from MarketWatch. I was wondering if you could give us a little bit more color. You gave just a little bit of color. You said during the first week of the Silicon Valley weekend, you said the question you guys asked was, how did this happen when you saw Silicon Valley Bank? So I was wondering if you could go to the Credit Suisse merger. I mean, wasn't that the big gorilla in the room? Didn't you breathe a sigh of relief when that merger happened? Thanks.
Sure. So, that was really the Swiss government. We, of course, were following it over the course of the weekend, and we were engaged with their authorities in the way that you would expect, all the ways that you would expect. It seems to have been a positive outcome in the sense that the transaction was agreed to, and it has been, the markets have accepted it, and it seems to have gone well, and I think there was a concern that it might not go well. So coming into the middle of this week, yes, I would say that has gone well so far.
Nicole.
Hi, thank you, Chair Powell. Nicole Goodkind with CNN Business. In the summary of economic projections, the FOMC sees the unemployment rate increasing to 4.5% this year. I'm wondering how you anticipate preventing this from snowballing while using the admittedly blunt tools at your disposal.
So that's an estimate of what will happen as demand slows and as conditions soften in the labor market. And it's a highly uncertain estimate. And I mean, there's really, we have to bring inflation down to 2%. The costs of bringing it down, there are real costs to bring it down to 2%, but the costs of failing are much higher. And if you read your history, as I'm sure you have, you can see that if the central bank doesn't get inflation back in place, make sure that inflation expectations remain anchored, you can have a long series of years where inflation is high and volatile, and it's hard to invest capital. It's hard for an economy to perform well, and we're looking to avoid that, and and to get back to where we need to be, back to where we were for a quarter century, and get there as quickly as we can.
But I guess the question is, historically, it's hard to. I'm sorry. Historically, it's been hard to contain unemployment, and the question is, do you worry about some sort of snowball effect, and how do you factor that into your projections and your thoughts?
Well, it depends on whether so recessions tend to be nonlinear, and so they're very hard to model. The models all work in a kind of linear way. If you have more of this, you get more of that. But when a recession happens, the reactions tend to be nonlinear, and that's so we don't know whether that'll happen this time. We don't know. If so, we don't know how significant it will be. And so, we're very focused on getting inflation down, because we know in the longer run that is the thing that will most benefit the people we serve. That's how we can have we've had very strong labor markets through these long expansions that we've had. 4 of the 5 longest, or 3 of the 4 longest expansions in U.S. history have been really since the high inflation period. And the reason was inflation wasn't forcing the central bank to come in and stop an incipient or an expansion. You can have very, very long expansions without high inflation, and we had several of those, and they're very good for people. You see late in an expansion, you see low unemployment, you see the benefits of wages going to people at the lower end of the wage spectrum. It's just a place that we should try to get back to.
NASDAQ. NASDAQ broke out and came down.
Hi,
Dow Jones.
Jean Young with Market News.
SPY.
I just wanted to ask, with all the
Ethereum.
events of the past 2 weeks, do you still see a possibility of a soft landing for the U.S. economy?
You know, it's too early to say really whether these events have had much of an effect. It's hard for me to see how they would have helped the possibility, but I guess I would just say it's too early to say whether there really have been changes in that. You know, the question will be how long this period is sustained. The longer it's sustained, then the greater will be the likely declines in or tightening in credit standards, credit availability. So we'll just have to see. I do still think, though, that there's a pathway to that. I think that pathway still exists, and you know, we're certainly trying to find it.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Just wondering how many financial institutions have been issued matters requiring attention or matters requiring immediate attention citations at this point?
How many? I don't know. But those are serious regulatory, particularly immediate attention. And I guess there were 6 of them. So.
And getting to the seriousness of it, how are you going to ensure that banks comply with these citations, take them seriously? How will you enforce them?
That is a great question and is right in the heart of what the review will be doing under Vice Chair Barr's leadership. So I think that's what you think about. You know, what can we do to make sure? But again, that's not for me to answer today.
So you don't have specific thoughts on that?
Well, I see. If I did, I wouldn't share them because I really, you know, this review's going on, and you know, I want nothing other than us to find out what happened and why, figure out what we can do to do better, and then implement those changes. That's all I want. It's for me to be giving you my half-formed or partially informed thoughts. You know, it just isn't appropriate. There's a real serious review going on with people from all over the Federal Reserve System who are not connected to this, you know, to this work, not connected to this bank, and under again Vice Chair Barr's leadership, and I'm confident that it will produce a satisfactory result.
Okay, we'll go to Jennifer for the last question.
Last question, everybody.
Thank you, Chair Powell.
Market
Jennifer
is still
Schonberger
dipping.
with Yahoo Finance. Curious, how do you view financial conditions right now? If credit becomes expensive enough, choking off growth, as you said you're watching for, would that situation warrant a rate cut? What situation would warrant a rate cut? And have the bank failures prompted any discussion around changing the implementation of the balance sheet runoff? Thank you.
So we haven't really talked about changing the balance sheet implementation. That's not something we've discussed yet. As I mentioned, we're always willing to change that if we conclude that it's appropriate, but we're really not seeing any signs there. Sorry, then the question before that was, just give me a...
Curious how you view financial conditions now, and if credit were to tighten enough, if that would prompt a rate cut.
So financial conditions seem to have tightened, and probably by more than the traditional indexes say, because the traditional indexes are focused a lot on rates and equities, and they don't necessarily capture lending conditions. So we think that, though. So there are other measures which if they're focused on, you know, bank lending conditions and things like that, they show some more tightening. The question for us, though, is how significant will that be, and how, you know, what will be the extent of it, and what will be the duration of it, and then, you know, once you know that, there's a fair amount of research about how that with broad uncertainty bands, how that works its way into the economy over what period of time. And so, you know, so we'll be looking to see the first part of that, like how serious is this, and how does it look like it's going to be sustained? And if it is, you know, it could easily have a significant macroeconomic effect, and we would factor that into our policy decisions. I mentioned with rate cuts, rate cuts are not in our base case, and you know, so that's all I have to say. So, thank you very much.
All right, he's done, everybody. Let's hop out of this. Let's hop out of that, and let's hop out of this right here. So it was a pretty darn hawkish one. The market took it as hawkish, but guys, as hawkish as it was, we're not really that worse off. I think if we're going to experience some pain, since the meeting is over, you're probably going to see a little bit of a rise in Bitcoin here temporarily. until we really start to see some more pain, it looks like the market didn't really take this all too bad. Like, look at the daily chart for Bitcoin. I mean, you know, it's not good, but it's not terrible. The 4-hour chart, as I think where people are going to get a little more concerned, because we did have a breakdown here and we broke down below the 20 finally. So you might find some more support as far as Bitcoin's concerned around the 26,720 level. But the market didn't take it terribly. I know we look on the 1-minute chart. I mean, it's not like we're dropping off of a cliff here back down to 25,000. That may come over the weekend here, but for now we're fine. NASDAQ, still green for the day, still looking strong, still trying to break out. It broke out on the 15 temporarily, the 5-minute temporarily. Then it came slamming back down here. So this thing got walloped. Dow Jones, again, let's go to the daily charts. Still being squeezed in between the 200 and the 20. SPY still being squeezed between the 20 and the 50 daily moving averages here. The market's in it. We're not in a bad spot, guys. Like, even after that, like I was telling you, there's almost like there's like hardly any chance for us to really have a horrible day. I think what's going to be important now is what happens for the last like 45 minutes of the trading day, and then on top of that, everybody, what happens tomorrow, tomorrow's Thursday. So Thursday, Friday, Saturday, Sunday. What happens this weekend? Are there going to be more banks having issues? You know, what's going to be happening here? But, you know, we're just kind of where we were just a couple days ago. Dollar index is going down, though. A rate hike normally means that the dollar is going up. This rate hike brought the dollar down. That is insane. Like, that's how much interest is all on this right now. You got ADA down a little bit, but still up quite a bit. Dogecoin still up quite a bit. I'm still looking at that. So relative, it's still doing fine. Apecoin down a little bit. Apecoin's a little bit more volatile, though, right? AVAX sideways, AXS sideways, sideways. Actually breaking down a little bit more. BCH coming down, BNB coming down, Ches or Chili's, whatever, sideways. Crow coming down here a little bit. So you're seeing a little bit of weakness here, but my gosh, guys, like with all that, we could still finish Bitcoin off today green. It's not as crazy as that sounds. Now we would want to get back above 28,000 to be frank, but we're still in an okay spot. Okay, so like short term, we're still in an okay spot. Quarter 2, quarter 3, I'm still holding firm that we're going to have a new low for the stock market and the Bitcoin markets. It's been very hard for me to keep that conviction here as watching Bitcoin approach $30,000. But I'm going to try to stay to my convictions. And if we end up running into a bull run later on this year, and I'm totally wrong about us hitting new lows, something like that, I'll take the chin up on a man. I'll have to invest late, then see what happens here. But I guess the dollar cost averaging was my hedge against this. But my God, like I'm still like, hey, something is going to get worse here later on in the year. And when that happens, I'm hoping I can buy in, make a bunch of money, and then, hold on for the next bull market here. But remember, this takes time. And we'll see if we actually do come back down a little bit more. But this market is very interesting. Like, despite all that, we're still trying to have a small reversal here on Bitcoin in the 5-minute. We might try to come back up here to 27,950 or so, a little bit higher. So a lot of scalpers probably entering right now. Definitely one of the more wilder days in the market I've seen in a long time, though. More time to buy and lower, exactly. Keep an eye on XRP. XRP's been volatile over the past few days. And thanks, Moonchatter, for liking. What do you call it? Definitely a crazy time. And Fed Now footnote says they will be using Cypherium and XRP. I'm assuming after the lawsuit they'll bless them. Oh, definitely they'll bless them. What do you call? They need. I mean, they don't have the technology. They don't have the engineers and the programmers to do this stuff. Are you kidding me? Who wants to go engineer and work for the Fed? Nobody. Like nobody ever. But okay, everybody, I'm going to call it a day. Watch out for the market. It should be volatile going for the rest of the night here. I won't be streaming tonight, or maybe I'll stream tonight for temporarily, maybe like a half an hour, something small. And then